All right, cool. Yo, what up for y'all on the YouTube replay? I really appreciate y'all. Hope you're having a great Tuesday. Check this out. The market is not too happy today. A lot of stocks that we know are down, like we see Duolingo down. They're down 7%. Dave is down 7. We own some of that stock. MicroStrategy, Palantir is down 6%. Apparently, there was some activist that said like if OpenAI is worth 500 billion, then Palantir is a $50 stock. And I don't know, there's just some news around them. But anyway, let me give you a quick portfolio update. Then we'll look at some of y'all's stocks in the comments here. Cherry says, yo, how about China stocks? Yeah, there are a few Chinese stocks I love. I do own one right here. FUTU stock. This one is Chinese and it's one of my favorite holdings. It's basically like a competitor to Robinhood, and the forward PE is a 21. And I think they report earnings very soon. So that one's interesting to see what happens there. And they sometimes do special dividends too. Steven said, should I use SoFi for my... Yo, I don't know, Steven. I've actually never used it, but I might be biased. Yo, I do own some SoFi shares. It's been one of my best performance stocks, but I actually have never used SoFi, so I don't actually know how that works, but I'm sure they're good. But anyway, yeah, here's this entire portfolio. We're finally green on progressive stock. What's down on the day? Let's see. It's, yeah, kind of a red day. Yeah, AMD is down 4, Dave's down 7, Reddit 4, Hood is down 4. But anyway, now let me show you my Moomoo portfolio. We do have a stock that's green in here today. It's our one defensive name. That's Coca-Cola Consolidated, this company. And look at that. As you can see, all these little buy orders, we have been dollar cost averaging into this stock. And that's what I kind of, recommend. You should slowly dollar cost average into a company instead of just spending all your money at once buying into a stock. It's more disciplined, more patient approach. But anyway, they're doing great. I'm up 5% on them now. But if you notice, all my other stocks are red on the day. So there's that portfolio. That's my buy and hold account. And then I have finally my Robinhood portfolio. This is my main taxable account. And oh, there's some like announcement they're doing. Wait, when is this? Revealed in 5 minutes if you look at the top there. So I guess we'll come back in 5 minutes to see what kind of announcement they got. Yo, Zio, what's up, man? Happy Tuesday. Thanks so much for the rose there. I appreciate that. What's going on in the market? I think there's just like a Fed meeting later. I don't know. Market's kind of been on fire lately. Yeah, dang, look at that. The NASDAQ, the QQQ is down 1% on the day. I mean, if we zoom out to the all-time chart, it's kind of hard to tell that they're even down. But yeah, that's not great. Nvidia's down too. Apple's the only little stock on the watch list green here. So yeah, pretty red day for a lot of tech stocks. But then there's the defensive names like a McDonald's, a construction stock like United Rentals, Carlisle, the roofing repair company. They're actually up on the day. So it's nice having a diversified portfolio. How about our Roth IRA? Let's see, Roth IRA. We're down 1.6% in here. These are all my holdings. What's Hood month? I'm not sure, Danny. I guess we're about to find out together, but that'll be revealed in 5 minutes. Yo, German, what's up, man? Good to see you. Who do you use for bank? I actually use Regions, which is actually a stock right here. The bank I use is actually ticker symbol RF, Regions. And I guess the stock hasn't done too great, but they have a nice yield, I guess. What's the yield on this company? A 4% dividend. I don't own their stock, but I do use them. Let's see. New York, what's up? Bitcoin down 8%. Is Bitcoin really down 8%? I mean, I saw MicroStrategy down like 7%. Yeah, wow, look at that. Bitcoin, I guess, they're down 5% on the week. Oh, yeah. Bitcoin is not down 8% on the day, I don't believe. Yeah, but anyway, let's see here. So we should buy stocks. Yo, it's tough buying a lot of stocks right now because it's at all-time highs. Yeah, look at Google and Meta today. Google's down. And yo, Cherry, thanks so much for the rose. I really appreciate that. Hey, what up, Jello? Lucas said super micro AMD stock. You know what? I'll go over AMD stock because look at them. AMD is down 4% on the day. So thanks to them, we're down $80. But that's okay because we're diversified and they've had a nice rally anyway. So let me do some analysis on AMD for you. Again, none of this is financial advice. I'm not an expert, just a college student. Can we check your portfolio? Yeah, John, I just went over my entire portfolio if you go to the beginning of the stream. But if you have any questions for me, let me know. I'll show you my year-to-date returns and stuff or whatever questions you'll have. I'm fully transparent. By the way, I sell nothing. I have no course or book, nothing. But anyway, here's the cool thing about AMD. Obviously, we know they have a huge GPU market share, 17% GPU market share. A lot of the gains from this stock, though, has been from the data center growth. The data center business is now really significant for them because, data centers need GPUs and, well, they make their own GPUs. It's pretty genius. So look at the free cash flow number. That's what FCF stands for. They made 1.7 billion of free cash flow. That's a new record. We can look at the net income as well. Net income was 900 million this quarter, up 230% year over year. So the net income's at a record. And look at this monster of a balance sheet. I mean, they have no net debt. So I just really like AMD's financials. I think they have a bit more potential to go get a better return than like an Nvidia. So when did you buy Google? Oh yeah, here's my total percent change on every stock in here. So we bought Google 24% lower than where it's at today, which is $162 a share. So luckily in this portfolio, we are green on every holding in here. And wait, let me see. It says there's like revealed in 2 minutes. If you kind of look at the very top there, it says like mystery drop. I guess we'll come and see what that is in 2 minutes. I don't know if I have to be on the app. I'm going to assume not. Do you do any options? I actually do not do options or crypto, really. I mainly just buy and hold stocks for the long run. Someone said, Mozart said Roblox stock. Yeah, man, that's a stock owned by um, Kathy Wood, and they are in a bit of a couple lawsuits right now from like the state of Louisiana and stuff. But anyway, here's what's been so growthy about Roblox. Check this out. And this is a pretty cool metric that we get here. This is their daily active users saying hi from Singapore. Oh, really, John? That's very cool. I predict the market will turn green by the end of the day. Hey, that'd be crazy. That's a 1% gain from here on the NASDAQ. But look at the daily active users on Roblox. The same time last year, they had 79 daily active users. Now they have 111 million daily active users. So that's really impressive about this company and the free cash flow growth. But one thing that's not great about Roblox is these net income losses. They're losing net income every quarter, and they have a bit of a leverage balance sheet. Hold on, someone's okay. Sorry. We're back. So yeah, I'm being careful with Roblox. I don't really think it's worth buying right now. I have a scary feeling I feel like Roblox will go a little bit lower. Let me go back to Robinhood real quick so we can see what this kind of mystery drop thing is. Revealed in 1 minute. It's probably something like not cool. But I guess we'll find out together. Hey Nathan, what's good? Check out INTZ. Just bought 1K shares of that stock. Well, let's see. INTZ. So this is intrusion. So let's see. We don't really cover these kind of stocks because they're really risky. Yo, what up, Catherine? If you look in the top right of my screen here, you see the market cap. That's how much the whole company's worth. And this whole company is only worth $35 million. So that's a micro cap. We don't really cover these stocks. And it's kind of hard to trust these companies. Like the whole company's worth $35 million. They do 2 million of sales a quarter. They lose 2 million a quarter. So you got to be careful with those, but I hope you make money on that. All right, let me go back to Robinhood. Let's see. Says it was revealed in 1 minute. New offer. Okay. Did it just go away? It just said revealed. Wait. Hopefully this doesn't show anything. 5,000 gold bars deposit. Oh, okay. Uh-oh. Hold on here. Let me thank you, Robinhood, for okay. You know what? Well, I'll just have to check that out later. So anyway, let's go back to someone said, what do you think about Hood stock? You know what? I love Robinhood stock, and I do own them. That's actually been my best performing stock, matter of fact, of all time. I regret every share I've ever sold of this. Like what I do is I buy a lot of a stock, and if I like double or triple my money on a stock, I'll sell a lot of it. Like I'll sell a lot of my positions, but I'll still keep a couple like lucky shares. And that's what I did for Robinhood and like SoFi as well. I regret every share I've ever sold. Like I sold 50 at 36 for like a 200% gain. But anyway, Robinhood's at an all-time high, pretty close to an all-time high. Well, they're down 4% on the day, but here's why I love Robinhood. They are such an innovative company and such a growthy company with high margins. I mean, check this out right here. We can see their net cumulative funded accounts, 26.5 million. But this is the best part right here, the growth of the company. The revenue's up 45% from the previous year. These year-over-year growth rates are insane. And remember this, they made 989 million of revenue, and out of that 989 mil of revenue, 390 million of that was net income. These are crazy margins, 30 to 40% net margins now. So I love Robinhood, deleveraging as well. So I love that company. What's the app where you can see the... Oh yeah, hey, by the way, this is a brokerage right here where you buy stocks and stuff. This is my favorite one right here. If you want to get it, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. It's also an affiliate link too. So if you sign up and deposit $100, we'll both get 5 free stocks. But anyway, yeah. Roblox is losing money because they decided to go, well, yeah. Well, another reason Roblox is losing money is because of the stock-based comp. They're literally they're paying employees 300 million worth of their stock every quarter, and it's a non-cash expense that's included in GAAP net income. So yeah, unfortunate for Roblox stock. So let's see. Someone said MSTR. So yeah, that's basically just Bitcoin. So as we know, MicroStrategy, they just buy a bunch of Bitcoin. They issue shares, buy a bunch of Bitcoin. So what you really want to look at is their NAV, net asset value, which is all their Bitcoin. And look at this balance sheet right here. Like, how does a company go from 7 billion of assets to 65 billion? Well, first off, they diluted the shareholder by $20 billion, bought 20 billion worth of Bitcoin. The Bitcoin, most of that has like appreciated by a good 50%. But anyway, you really just compare the market cap to the price of the Bitcoin. They're kind of like a leveraged Bitcoin. Sometimes when Bitcoin goes up 1%, MicroStrategy will go up like 1.5%. But yeah, it's kind of like a Bitcoin proxy. Um, let's see. Thoughts on Paramount after the Skydance bought it? Didn't they change the ticker symbol or something like that? I don't know. Well, dang, this stock, I don't think, yeah, they're not trading right now. It says 0.0% on the day. Yeah, they're not. Or maybe they are. I don't know. That's weird. Well, I wonder what the new ticker symbol is. Do you think Blossom? I don't know, Steven. They don't make too much money. Uh, let's see, Mara, please. Yeah, this is kind of another Bitcoin proxy, and unfortunately, this one, instead of like a Bitcoin holding company, I believe this one actually. Oh, there's my portable charger. This one actually mines the Bitcoin. So let me actually go check this out right here. So let's go to the balance sheet as well. Basically, it's another Bitcoin proxy, but this one doesn't really keep up with the price of Bitcoin because Bitcoin's close to all-time highs, and this one like isn't. So I just feel like it won't really keep up with Bitcoin. UNH. Let's see. Yeah, if you guys got any stocks you want to look at, let me know. I'll check them out for you. So yeah, here's United Health right here. The reason they gapped up on this day yesterday or 2 days ago is because Warren Buffett bought a bunch of this stock, and he actually bought the stock at 315 a share, and it was only disclosed till right here. So he bought shares at 315 a share, and it's still under that. So that's why the stock really rallied up. You know, if Warren Buffett buys a stock, he always does his due diligence. You know, the multiple here, the PE, the net income multiple is a 13. So the net income could fall another 20-30%. And it's kind of expected to do that. You know, the EPS is going to go from $6.85 to $1.70 is what the analysts are expecting. So the net income is supposed to collapse where they won't be able to afford the dividends. So I do wonder what will happen. But 3% yield on this company, I would probably wait for it to come down a little more before I would maybe fill this gap or something before to buy. But that's a position that you don't want to have it as a meaningful position. You want to like nibble on it, you know, make it as a quarter size position, quarter of a quarter size position or something. Charge your phone. Hey, don't worry. My phone is charging thanks to the portable charger. Would you buy CoreWeave? Not really. You know, actually, that's in the Nvidia portfolio. If we go to Nvidia's portfolio right here, they own CoreWeave. I mean, I would own CoreWeave, but at a much lower price. And dang, look at that. They're on a nasty downtrend. But let's see. I know they're really growthy, but they're losing a lot of money. So this is the good news. This is the one thing I love about the company is how growthy they are. The sales are up 3x. I mean, it literally went from 400 mil to 1.21 billion. So that's a good growth rate, but they are still losing a couple hundred million in net income every quarter. I would like to see those losses start to narrow. But yeah, it looks like the revenue is just projected to keep on climbing higher and higher. So they're really growthy, but I don't know. Didn't they just acquire like Core Z, some like Bitcoin company? I don't know. I got to do more research on them. Tony, what up? He said Pan W. Yo, okay. Phone. Okay, that's Palo Alto Networks. That's actually a company owned by Nancy Pelosi. You know, these super investors that I keep going over, they always have to reveal all their trades by SEC law. You know, you can see their exact portfolio and holdings, and it's cool as you can kind of follow them in the trades. But one stock that she owns, it's 2.3% of her portfolio, is Palo Alto Networks. They're up 5% on the day. This is one of my favorite cybersecurity stocks out there. They're the largest one. It's my favorite or second favorite cybersecurity company, but I love subscription model companies. And check this out. Half the revenue comes in their subscription business, and the subscription revenue literally just hits a record every single quarter, every single year. It's just the most incredible growth of the subscription business. And they're making a lot of money. Like, look at this free cash flow, making 500 mil plus of free cash flow a quarter, a couple hundred million in net income a quarter as well. So that's a sector you want exposure to in the long run. Cybersecurity will definitely need that. What happens is, yeah, hey, your boy, man. Hey, this is a, brokerage right here where you buy stocks and stuff. If you want to get this app, it's in the link tree in my bio, the very first link there. It's an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. And here's another really cool stock that I want to analyze. This is Duolingo. I'm really considering buying like one share of this stock in my Roth IRA. Um, because the fundamentals are so good, and this is what I really look for in a company. They check all my boxes. Like, this is another company where 85% of the revenue comes from their subscription business. And check this out. Subscription revenue literally just hits a new record every quarter. Goes, look at that, 46%, 45% in the middle are the year-over-year growth rates. Sorry, need my water here. So yeah, the subscription revenue just hits a new record every single quarter, and same with the advertising revenue. Look at this year-over-year growth. The advertising revenue grew 55% year-over-year. So both main segments of business are growing like crazy. And look, they're beating on the analyst expectations. They beat on revenue. They beat on net income by almost double, and they beat on EBIT. So this was a great quarter for them. The free cash flow is up 60% year-over-year. Net income's up 83. Revenue's up 41. So look at that. Revenue's up 40. Profits are up 80. That means they're growing the net margins. Net margins are up 30% year over year. They deleverage the balance sheet like crazy. Now they're completely debt free. The assets went down with their liabilities. So that's normal. You see that all the time. So Duolingo is a great company, in my opinion. Again, not financial advice here. I think it's at a decent price, Paul. To nibble on it, I wouldn't go all in, full size position, but I think it's worth a little tiny position here. Whatever you, yeah, hey, and Matt Tree, again, this is a brokerage right here. It's in the link tree in my bio, the very first link there. If you want to get this software I'm on, it's free. It's an affiliate link too. So let's see. Use Robinhood at all or just Webull? Well, I'm not on Webull, but I do have a Webull and Robinhood account. But yeah, here's my Webull account. We're up 15% all time, and I do have a Robinhood account. But my favorite brokerage for most useful and everything would be this one right here. I have all the links in the link tree in my bio, though. I love all three of these, but this one's my favorite for most useful, best free features and everything. So anyway, let's keep going here. More stocks. Aaron said Palantir stock. Yeah, man, I love this company. I think they're down like 5% on the day. 6% on the day. I'd love to get exposure to Palantir, but I just want the price I need it to be even lower than where it is today before I really want to buy this stock because the valuation is still pretty high. Like, check this out. The price to sales is 112. So why is S&P and QQQ down today? I don't know, Nikki. I'm not sure the exact reason. Maybe just momentum. But yeah, look at this. The price to sales are 112. So they're trading at 112 times revenue, not even like net income, but revenue. But here's why they're such an expensive valuation because they're so growthy. Like, look, half the revenue comes from the government. Like a lot of police stations use Palantir. And the government revenue is up 50% year over year. So incredible growth on the government revenue. And not only on the government revenue, but also the commercial revenue. Commercial revenue is also at a new record of 50% year over year. So both main segments on Palantir are growing like crazy. They just had their first ever billion-dollar quarter, $1 billion of revenue, and on that billion, 330 mil of net income. So that's a 33% net margin. They're also a debt-free company, unleveraged balance sheet, no debt whatsoever, and they have $6 billion of cash, up from $4 billion the same time last year. So anyway, that's why they're at such a high valuation. I'd love to own them, but still, valuation too high for me. Tell us about the worst stock you bought. Oh yeah, that'd be ChargePoint. My biggest loss ever. Well, I have these. These are some of the losses I still have because there's still some hope for them. I definitely am not buying more. But my biggest loss ever that I'm very glad I sold out of. I lost like well over 1,000, maybe 2,000 plus on this stock right here. But this is ChargePoint, and I'll kind of teach you how. This is like a basic how not to buy. And look, I sold all my shares right here on this day. That's my sell order. I sold all 66 shares I own at $2.85. Oh, well, that's before the stock split. Well, anyway, it's gone way lower since then. And look where I was buying my shares. So again, I sold all my shares right here on this day right here, at stock at adjusted 56, and I was buying it. Yeah, way up here. Look at this. way up here, I was buying ChargePoint. And this is when I didn't look at financials. This loss taught me to really analyze a company's financials. So here's why I would never buy this stock at all-time lows. Look at the top right, the market cap. It's a $286 million company. So the whole company is worth $286 million. Well, look at these losses. Like the reason the stock's at all-time low is because they're pricing in the real chance of bankruptcy. They lost 60 mil this quarter, 60 mil last quarter, 80 mil last quarter, all for a business that is declining. After the business declined 20% the previous year, it declined another 9%. So it's a business that's not growing, losing an insane amount of money, diluting the shareholder at all-time lows. So, that's when I wouldn't buy at all-time lows, and that was one of my biggest losses. But it's an extra big loss if you don't learn from it and see why they fell and can avoid buying those kind of stocks again. All right, so someone said WULF, Google just backed them. What do you mean back them? Like they took an investment? I don't know what that means. Can prop firm trade stocks like Palantir? I'm not sure. What up, Chai? And Ali, he said Amphenol stock. Yeah, we can look at Amphenol stock as well. Um, Sorry, my Wi-Fi's kind of bugging right now. It does not want to pull up terrible stock. So let's see. But they are down 5% on the day, but what's the market cap? So a $3.5 billion company. Um, TeraWolf Google Finance. Google becomes top shareholder in TeraWolf. So yeah, you're right. Looks like Google took a stake into this company. Very interesting. But this is where the revenue comes from. Digital currency mining. So looks like they mine Bitcoin or something. Who knows? Yeah, hey again, Issa, if you want to get this little app I'm on, it's where you buy stocks. It's actually a brokerage. It's in the link tree in my bio, very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. But anyway, can you break down what you look at before buying a stock? Yeah, hey Sampog, I do that in some of my videos. Thanks so much for being here, by the way. But I'll kind of do that with my next stock here. And Ali said Amphenol stock, and this company is one of my best performers. They have been a serial acquirer. They've been buying so many companies. Literally just yesterday, they bought a huge company called Textron for $1 billion. And it's supposed to be, if you kind of look in the very middle here, accretive to the EPS. So they're buying companies, and whenever they buy it, it's instantly accretive to the EPS, which is great news. I love it. Anyway, this stock is at an all-time high right now because they're so growthy, and a lot of that growth has come from Nvidia, from their communications business. It just hit a new record. The profits are at a record, like free cash flow, record 1.12 billion, net income record 1.1 billion. Look at this part right here. This is what I love to see in a company. Revenue's up 56, but net income's up 108. So what does that mean? It means they're expanding their net margins. They now have a 20% net margin, up 33% year over year. Incredible. So yeah, they bought this company, by the way, for exactly $1 billion, and they made 1.1 billion of free cash flow this quarter. So they literally bought this company with 1 quarter free cash flow, and it's expected to instantly be accretive to EPS. Anyway, a lot of the gains from the stock has come from Nvidia, because Nvidia has this new NVLink spine product. This NVLink spine product literally uses 2 miles of copper cables that they've mainly been ordering from Amphenol Group. Pretty cool. Someone said, can you do super micro computer stock? Yeah, I do own that one, and I am not too happy with them. Because of their financials aren't too great right now. So check this out. Where is my super micro position? Yeah, so here we are. We're up 67%. Yo, we bought this stock, by the way, during all the shenanigans down here during the accounting issues. But here's what I don't love about super micro. It's that the margins are collapsing. Since I listened to the earnings call, they're giving like customers bulk deals. It increases their revenue. Um, but the margins are being squeezed. So I'll show you what I mean here. So if you look at the revenue, it's really easy to understand. Like, check this out. The revenue's up 7.5. So the revenue's up 7.5, but the profits, the net income is down 34% year over year. What does that mean? It means the margins fell by 39% year over year. It's tough. I mean, they just sell a commodity, and they're getting squeezed from Dell. Kind of. I still own them though. I'm not selling any of my shares. But yo, what up, Two Trick? Why is the stock market down today? I'm not too sure if there's any exact news. Maybe it's just momentum. Like, yeah, look at this. Qs are down over 1%, SPY's down 0.4. So yeah, a lot of big tech is down today. And yeah, here's my portfolio. We do have some defensive names like McDonald's, our kind of roof repair company. Carlisle's up 2%. But yeah, if we look at Meta, Google, they're both down close to 2% on the day. Do you think investing in Rockstar Games is a good idea? Yeah, so I've been hearing a lot of people talk about TTWO stock. If you've heard of GTA 5, Rockstar Games, Red Dead Redemption, it's owned by this company right here, TTWO. And as you know, you probably heard on the news, it's popular that they're about to release GTA 6, and they're in such a unique position. And this is why they've kind of been appreciating in stock price a bunch recently. Whenever they release GTA 6, it's instantly going to bring them in billions of dollars. Like the minute they release it or the month they release it, which will be in that quarter earnings. So and they'll continue to make money off it. So basically, they have an asset they're about to release that's going to bring them so much growth in the future. So that's why they're at all-time highs. They're a gaming company, and they'll probably sell skins, DLC, map packs, whatever on GTA 6. Should be a fun game. A lot of grown people can't wait to pay for it. I can't wait. So someone said, "What's your thoughts on Eli Lilly right now on VKTX?" So yeah, I heard the news. Is it true that Eli Lilly wants to buy VKTX? Whoa. They're down 42% in the day. I bet I know why. Weight loss, their weight loss had side effects. Uh-oh, not good. So here's what's kind of been concerning about this company before that news even dropped is that this is still a startup right here. So if we go to the revenue right here, we click on the revenue and it says no data because this company has never sold anything. And I'd even see that invested '09. Invested '09. Thanks so much for the perfume, for the gift there, buddy. I really appreciate that. If you got a stock you want me to look at, invested '09, let me know. That Pearl, thanks for the 2 roses as well. Yeah, we'll look at SCRV. Thanks for the roses. I appreciate that. Sorry, I forgot to mention that. But yeah, this is a revenue-less company, and look at these losses. They're losing a lot of money. The losses are worsening. What about, did they just report earnings? I don't know. It might have just been that news. But luckily, they do have a good balance sheet. Like, actually, check this out. They have no debt at all and $800 million of cash. The cash pile did fall 15% year over year, but still $800 million of cash, no debt. But they're still a startup, and unfortunately, it looks like the company might not be able to sell their product because it has some bad side effects. Hey, thanks so much for leaving a like on the stream. Yeah, that's the best way to support me. Just leave a like. By the way, I sell nothing. I have no course, book, Discord, WhatsApp, literally nothing. Just on here to give my opinion. That's not financial advice. Hey, best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But just type into YouTube Nathan Robert. I'm also streaming on there. So if you miss anything, you can watch it on the replay or just watch it right now and skip back. But anyway, here's Eli Lilly stock. I predicted that this one would kind of have a pretty good recovery because the only reason Eli Lilly stock fell because they beat incredibly on their revenue, net income, and EBITDA. They beat on every metric, but the reason the stock fell is because they had this weight loss. So they have this weight loss injection, but they had this weight loss pill version, and the pill just didn't work. Just bad results. It just did not work. Weight loss pill, and that's why the stock fell, which is no biggie because right now, I mean, look, the orange lines what the analysts expected. They beat on revenue, they beat on net income by a good chunk, and EBITDA by a good chunk. So they beat on every metric. It was just that sentiment. I'm like, are they really going to lose 200 billion in market cap over this? I think they'll recover, and they recovered. I wish I took a stake, but anyway. Yo, invested '09. Thanks, man. I do appreciate that, brother. Kenneth said BMNR. BMNR. How many times a day do you stream? Yeah, I try to stream every single day. So yeah, if y'all wanted the follow button, I try to go live every day. Usually around this time. Hey, free me. Good to see you, man. Long time no see. Yeah, yes, sir. Good to see you, man. Hope you're doing good, K-Dude. So, let's see. Electronic Arts. Oh yeah, the ticker symbol EA, right? We'll check that one out. So here's Bitmine. This is the company that Tom Lee works for. Ever since Tom Lee started working for this company, the stock is up 1,000%. All this company does is just issue shares, raise cash, and then they buy Ethereum with that cash. So basically, you want to look at the market cap for this company more than any financial metric here because you do the net asset value of their Ethereum versus what the market cap is. So they did just issue a bunch more shares for Ethereum. But anyway, yeah, just an Ethereum company. They're kind of like the Ethereum version of MicroStrategy. It's MicroStrategy, but for Ethereum. So yeah, let's look at EA right here. He says with their latest Battlefield 6 open beta, it was a good game. So yeah, here's ticker symbol EA. I actually do like this company. They haven't been doing too well. Actually, they're at an all-time high, so better than a lot of other stocks. But anyway, let's see this net income. Yeah, look at this. So even though the net income did fall 28% year over year, that was real. That's actually not good. The margins did fall, but they're still making a couple $100 million every quarter. They're making 300 to 200 million in net income every quarter. But I think investors aren't happy with this slowdown in revenue. Revenue is only up 0.6%, and the net income fell, so that means the margins fell. But what about free cash flow numbers? Good free cash flow numbers, actually, really good numbers. So, yeah, just another gaming company, and you get a dividend. Look at that, you get a 0.5% yield and only a 18% payout ratio. Hey, what up, Sermon? Did you buy anything today? Actually, no, I have not bought anything today. I I deposited some cash today. So I got $800 of cash now. It should update later. Yeah, I love this because I keep my cash in here and it earns interest. So let's see. User said ticker symbol V. What is this? VOYA. Voya. Okay, so this is a $7 billion company, probably like a bank. I guess we're about to find out. So, health solutions. Okay, that's actually down a bit year over year. And wealth solutions. So yeah, they're in wealth solutions, just up 3% year over year. Investment management down 10. Well, let's see. What's the net income on this company in the sales? So not great. The lifeblood of the company, the sales are down 2.5%. So sales are down 2.5%. Net income's down 31. But anyway, they're still making, 100 to 200 million in net income a quarter. And you get a 2.5% yield. And no way. Dude, yo, everyone, shout out to Fern Mac on the YouTube stream. Left a super chat. Thanks so much, dude. He says, SMCI stock. What do you look for in a good stock? So I look for hey, we were just looking at Supermicro. So yeah, I do own this one actually. So I am a shareholder of Supermicro. What do I look for in a good stock? Good financials, good fundamentals, ones that I can trust. I kind of stay away from the meme stocks, like some of these like risky small caps. So there is one thing concerning me about Super Microcomputer. This is why I'm not buying the dip on them yet. Like even at right here, 44, I think it's worth waiting to still buy into Super Micro, just because one thing scaring me here is the margins. And I'll kind of explain what I mean here. So like, look right here. The revenue's up 7. And thanks again, but dude, for the $2 super chat. Thanks, Fern Mac. But revenue's up 7.5, but net income fell by 34%. So what that means is they're losing their margins a bit because they're giving customers bulk deals. So I am waiting for Supermicro to go down a little more before I buy more, because I already have some shares just for me in my position. But they are interesting, and I do own them, so I do have exposure. I might be biased, but I do. That's kind of my honest thoughts on them right now. Let's see. PSL, what's the name of this? Oh, yeah. Hey, this one's my favorite one right here. I think this is my favorite one to do analysis on. It's in the link tree in my bio. First link there. It's a brokerage where you buy stocks on. So let's see. SoFi stock. You know what? Let's look at that one too. We haven't looked at them today, and I am in love with this stock. I might be biased again because I own them. So I do own 24 shares of SoFi, and here's why they deserve to be doing this good. They deserve to be at this kind of 52-week high level, multi-year high level. This is what I love about SoFi. Check this out. So where does the revenue come from? This is a fintech right here. They have their own banking charter. And hey, Debt Pearl, thanks again for the roses there. And check this out. Look at their financial services business. This is the best part about the company, is the growth. It's up 105% year over year. This business has doubled, 362 million of revenue. I mean, if we zoom out, look at that. It just hits a new record every quarter. It used to be only a couple million a quarter. Wow. So financial services are insane growth there. So yeah, if we just look at their total revenue, it's doing it in cumulative. Anyway, they're the most profitable they ever were. They made 100 mil of net income this quarter. I love SoFi. They deserve to be doing this good. Oh yeah, hey Drifts, it's in the link in the description if you want to. All right, here I'll actually just put it in the chat for you. Yeah, it's in the link tree in my bio, very first link there if you want to get this software I'm on, this brokerage. That's my favorite one, Drifts. Just lost $600 trading BS. No, dang, £5. That is unfortunate. Could I ask, how does dividends work? Like if I bought a share that paid dividend, but I sold my share, you would still receive the dividend as long as you sold it after the X dividend date. Like, I think I'm getting a dividend from United Rentals right now. So if I go to this stock right here, hopefully it loads. So yeah, look at this. If you kind of look right here, I have $8.95 pending in a dividend. If I sold all my shares right now of this stock, I would still get this dividend. So yeah. Ooh, someone said NU and then Reddit. Ooh, I want to look at Reddit. Oh, actually, no, we got to look at SERV. Yo, Debt Pearl, dude. I don't like this company, to be honest with you. Like, if you're looking for a good robotics company, I just don't love this one. They don't have any. I think they might have had a partnership with like some big company, but for right now, I'm just not loving this one. It's a $580 million company. So if I wanted exposure to real robotics, I'd probably go with the Symbiotic or an Amazon. But like, look at this right here. The revenue is 600,000 this quarter. I mean, it's tough to trust this as a real robotics place. So revenue is 600,000. They lost 20 million in net income this quarter. So it's tough, in my opinion, to really trust this one. But thanks again for all the roses, dude. I really appreciate that. And if you got another stock you're going to look at, that Pearl, let me know. I got you, man. So someone said Reddit. Dude, I love Reddit right here. They're at an all-time high pretty much. Yeah, exactly, John. Do you use Interactive? I actually do not. Would you say that your account is more swing traded or yeah, mainly long-term buy and hold stocks. Um, I'll sometimes swing trade, but I mainly just buy and hold for the long run. So here's Reddit right here. Or what I'll do is I'll buy a stock, and then once I make a bunch of money on it, I'll sell a lot of my position, and then I'll keep a little bit of shares left. It's kind of what I did with Robinhood and SoFi, but I regret all the shares I sold to them. Hey, thanks again, Dad Pearl, for the 8 roses. Thanks so much. Yeah, we'll look at Enphase too. So here's Reddit though. Reddit stock is nearing an all-time high. This is not a meme company anymore. If we judge them the same way we would any other company, we forget the name Reddit. We see that this is an incredibly growthy company. The revenue is up 77%. I don't know how they pulled that off, but revenue is up 77. They're the most profitable they've ever been. 90 million in net income. They have no debt at all. Unleveraged balance sheet. Literally $2 billion of cash, up from 1.7 billion, with no debt at all. This business kind of like runs itself. 90% gross margins. Free cash flow is also at a record this quarter, up 3x. Or 4x really. So everything about Reddit, their ARPU, their average revenue per user was up 48% year over year. So they make 48% more money per user than they did the same time last year. So incredible. So yeah, here's Enphase Energy. One thing that has been hurting them is the removal of the energy tax credits from the Inflation Reduction Act. So and it's kind of been hurting this company. But one thing I like about Enphase is that they've kind of recovered from this huge pit they were in. Like, they used to make an incredible. This one I was buying the stock. I have a history with Enphase. I don't own it any right now, but they were making over 100 million, 150 million a quarter. Then it went to literally negative, and investors were not happy. The stock tanked like 50, 60%. But now they're back to making net income every quarter. So that's the good news. I do wonder what analysts are expecting. Yeah, they're kind of expected to just stay around this 20 to 25 million of EBITDA a quarter. So yeah, if they only make, it's tough, but we gotta hope for for the solar industry to come back. Robots are having competition in China and months coming. Yeah, hey, I heard China is like really big on robots. If you were to buy Reddit, would you wait for a dip? I do own Reddit, by the way. Maybe I forgot to mention that. Hey, I might be biased. Reddit has been one of my best performance stocks. They're at the top of the list here. We are up 141% on Reddit. So yeah, I bought this one at like the $96 level, and I've kind of just been holding on to my shares ever since. They are down 3.5% on the day though. So let's see. Miss said, yeah, ASTS. Yeah, I don't love ASTS Space Mobile, to be honest with you, Lucas. That one's not good. I don't think. I like Rocket Lab. Rocket Lab's a cool one. But someone said, wait, yo, Miss, let me know if you're talking about BYD as BYD or Boyd Gaming, or BYD, the China electric vehicle company. Because this company is kind of giving Tesla a run for its money. So yeah. Oh, wait, did we not look at NU stock? I am so sorry. Let's get back to this one. So NU stock right here, this company, I love this I love this stock. So this is a crypto bank out of Brazil. Man, I'm fumbling my words right now. Let me get my water here. So here's where the revenue comes from. If we look at it by geography, 93% of the revenue just comes from Brazil. So that's, in South America, Brazil, that's where their currency sucks, and they use crypto for transactions, and that's why it's so genius for them to be there. And look at the profits they're making. This is the real winner. It's not some startup. Like, they're printing money, and this is in USD. They made 640 million in net income just this quarter. I mean, that's incredible net income numbers. So they're kind of a crypto proxy, but I really like that company. Really like that one. Oh yeah, hey, we can look at Symbiotic. Hey, try not to spam there, yo. Try not to spam, guys. I might have to. I need a moderator. Okay, so here's Symbiotic right here. This is my favorite warehouse robotics play. Actually, it's probably just my second favorite robotics stock out there. And look at that. They're kind of coming on a valuation that maybe we could work with. They're down 6% on the day. And let's see. So this is what I love. They have real IP, real patents. They have like over 1,500 patents, which is pretty cool. But look at this revenue. I love this one because they have real revenue, unlike that other robotics company. The revenue's up 26% year over year. So revenue's up 26%, but they are still struggling with net income positivity. They did lose, they're barely losing any money, like 20 to 30 mil a quarter, but probably in a year or two, they'll fix that and be net income positive. But look at this, their largest customer is actually Walmart. They do warehouse robotics for Walmart, and Walmart likes the company so much they took a stake. So Walmart owns 13.5% of all the shares. They're the second largest shareholder. Hey, Dat Pearl, thanks again for all the roses, the 12 roses. I appreciate that. What do you say about Oscar? Yeah, let's look at Oscar Health. So Oscar Health, this one has kind of been struggling with like UNH. With the whole, they're a Medicare, Medicaid business, and the government is, the regulation is not in their favor right now. But here's what I love about them. Regulation aside, this is such a growthy company that I almost like probably a little more than UNH. Like, look at the growth here. I mean, for the full year 2020, revenue was 580 million. Now it's 9.2 billion. I mean, that's an incredible number. Just in the most recent quarter, it was 2.86 billion. So incredible. They are still struggling with consistently making money though. So that's one thing you do got to be aware of. But I just love the sales growth of that company. But we want to see them before I like really buy them significantly. I'd want them to show more signs of net income consistency and the regulation side of it. So yeah, hey, Jace, Owen. Oh, I want to look at Nebius. Remind me to look at Nebius, but let me look at Lululemon right here. Oh, we got to, do you think it's too late to join FIX? I think so at this price. It's not too late forever, but at this price it is. How about BlackRock stock and Ally? Oh, dude, I love BlackRock stock. We got to look at them too. So, but yeah, man, I love FIX stock. So, and we got to look at Amazon. Yo, I got to make like I gotta write these down. But anyway, here's Lululemon. It's that apparel company. They just sell a commodity like shorts and shoes or whatever. So you can see their number of stores. They got 770 stores, up from 711. But here's the good part about this company and the bad part. The bad part is the margins are falling. So the revenue's up by 7, but net income's down by 2. But they're so profitable since they make, over 2 billion a year. They're buying back their own stock like crazy since they don't pay a dividend. So look at this. The net income is down by 2%, but the net income per share is up by 2.4%. So that's because the share part of the ratio went down. So even though the net income's negative, your return as a shareholder via EPS is positive. Pretty cool. So let's see. BlackRock stock, I actually really like this company, and I'd happily buy and hold this one for the long run. BlackRock stock is an asset manager. You've probably seen them. Like if you go to the shareholder of any company, usually you'll see like BlackRock is one of the top shareholders of any stock. But here's what's so cool about this company. So here's how diversified their revenue streams are, equity, fixed income. But now they have this huge alternatives business. And this is that IBIT ETF. So BlackRock has this Bitcoin and Ethereum ETF that goes to their alternatives revenue. And look at the growth year over year. It's up 71%. So you can kind of see this like huge jump that it had this quarter. Used to be, 3 to 400 mil. Now it's 6 to 700 mil. So they take a lot of fees. But yeah, they're just so diversified. I love BlackRock, and that's one I just buy and hold for the long run. You get a nice dividend too. Can't remember which one. BlackRock just bought 53 mils of shares. BlackRock bought a little bit of every stock. So, all right, let's see. And also on FIX stock, this has been the stock that's led to like all of our portfolios year-to-date gains. I mean, look at this stock right here. This is an HVAC company, heating, ventilation, air conditioning stock. And a lot of the growth has been from the technology sector, specifically from data centers and Bitcoin mining rigs that need cooling. And Comfort Systems installs like these pipes right into the like server racks, and it's better than water cooling. So anyway, this has just been such a growthy company with huge margin expansions because they have a lot of pricing power. So look at this. The revenue's up by 20%, but the net income's up by 72%. So they had a record net margin quarter, up 43% year over year, and they grow their dividend every quarter. There's so much to like about this stock, except the valuation. So let's see. Yo, what up, Crispy? What did you buy today? I actually did not buy any stocks today. Um, but I am looking. So let's see. Yeah, no problem. I'm probably saying your name wrong. Chia Marie. I probably said that wrong. I do apologize. But someone said DX is a dividend play. I think this is Dynex Capital. So this is a BDC right here, a business development company, and they basically have a rule with if we go to the yield here, the yield is so high. What is it? Yeah, 14% yield. That's because they literally have to, by law, pay out 90% of their taxable income in the form of a dividend to shareholders. And because they're a BDC, they're kind of like a REIT. But yeah, so that's why they have a huge yield and it is somewhat sustainable. But again, these don't really outperform the market in the long run. But I do see this stock as a pure dividend play. You're just buying them for the yield. Probably won't outperform the S&P 500 in the long run. I would watch some of these numbers like it's hard for me to understand this kind of business. Like the revenue, the revenue of a company went negative 1 million this quarter. Like the not net income, but revenue. I don't know. So I got to do some more research on that one. So I don't know if I'd really fully recommend that one right now. But looks like a dividend play. Ooh, Mason or Mansoor said Alibaba. So this is like the Chinese Amazon. Oh, what up? We can look at Nebius and HESM. Remind me to look at those. Oh, I keep forgetting. Remind me to look at Nebius. So here's Alibaba right here. This is the Chinese Amazon stock, and they are Chinese, so that's why that's why they traded this like low PE, a 16 times net income. But check this out right here. This is the good news. If we go to their net income, they're making a lot of money. 2 bill this quarter, 6 billion last quarter, another 6 bill. So if you average it out here, they're making like 3 to 4 billion in net income a quarter. They just now started paying a dividend, so you get a near 1% yield, very low payout ratio. So yeah, just like a Chinese e-commerce play, they own AliExpress. Uh, if anyone's heard of them, it's kind of like a Temu, Wish.com. Anyone remember Wish? I think Wish is a publicly traded stock, and they just went bankrupt. Their sales went to zero. They shut down Wish.com. Wish.com used to be publicly traded. Anyway, Amazon stock. Let me see. We do own Amazon, by the way. I have 13 shares of them. Yeah, they are down 1.15% of the day. But yeah, let's look at Nebius stock, and then we can look at Amazon. Remind me. So actually, Nebius AI is in the Nvidia portfolio. So if you go to Nvidia's holdings right here, one of their holdings, 3% of their portfolio is in Nebius AI right here. So again, just because Nvidia owns a stock doesn't mean you should own it, of course. So that's why I always recommend you got to go do your own research on Nebius, and let's go do our own research on it. Here's a few things I'm loving about them, and it's how insanely growthy they are. I mean, look at this sales. I can see why Nvidia likes this one. I mean, and I don't like all Nvidia picks. Like I really don't like WeRide, and some of those are trashy names. But look at the revenue. It went from 15 million to 105 million this quarter. That's incredible growth, up 700%. I mean, or 7x. So, I mean, just incredible growth on Nebius, and that's why I think they gapped up on earnings. They beat the analyst expectations. Let me find that actually. Anyway, yeah, they are owned by Nvidia, but I like the growth of them. They are still losing money. They are still losing a lot of net income though, so I would want to see them get net income positive. What app is this called? Yeah, hey, by the way, this is a brokerage right here where you buy stocks and stuff. If you want to get this little brokerage I'm on, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a brokerage called Moomoo, but it's also an affiliate link. So if you sign up for this app and deposit $100, we'll both get 5 free stocks. Pretty cool. I always miss the good times to buy in. Hey, well, no, if you just plan to buy and hold a stock forever, it doesn't really matter if you time the bottom, like right here, I just slowly buy into the company. Don't spend all your money at once buying a stock, slowly dollar cost average into it like this. But that doesn't always work though. I mean, look at this right here. Yeah, great lesson. Like, look, even though I slowly bought into this company, I slowly dollar cost average into that. I didn't fully do my research. It wasn't a high quality one that I shouldn't have continued to keep buying this one. And they just keep on going lower. So be careful if you're going to keep on buying down in a company. But hey, yo, Dat Pearl, thanks again for the 20 roses, the 20 lightning bolts. I really appreciate that. So here is HESM stock. So there's Hess stock, ticker symbol HES, and this is the midstream company. And Hess just got bought by Chevron, and there's rumors now that Chevron is just going to acquire Hess Midstream as well. And this is basically just an oil oil and gas pipeline company. They own a bunch of pipelines. But look at this right here. They have a huge yield, and it's sustainable, but a 6.77% dividend yield on this company. So really nice yield there. We can see the net income. They're making basically 180 million in net income every quarter. So yeah, they're pretty cool. And I don't believe they give a K1 tax form. Do you know if they give a K1 tax form? They might, because I don't know if they're an MLP, but they might not. Um, Lancey, what's up, man? Yeah. Um, Alibaba's business to business e-commerce. Okay. Well, I know they got AliExpress, but yeah, you're right. Actually, yeah, AliExpress is individuals don't really buy stuff on there. And yo, Jinx, no way, Jinx.e. Thanks so much for the 10 roses in the corn. I really appreciate that. If you got a stock you're gonna look at, let me know. I can check it out for you. Yo, Todd, what's going on, man? Hope you're having a good Tuesday. Any idea why the market's down so much? I don't really know. Uh, let's see. What is the PE ratio? So the PE ratio is just the net income multiple. So if we go to JD stock right here, this is another Chinese stock right here. Unfortunately, this one has not done too good. It's the same price that it was back in 2015. But if we go to the PE right here, the PE stands for price to net income. Uh, or it's really price to EPS, and EPS is just net income per share. So it's really net income multiple plus any buybacks or share issuance. So that's all the PE ratio is. Uh, and this is another Chinese company. And look at that. So since they're in Chinese, we're going to convert the revenue to USD so you can get a better understanding of the stock. But oh, yeah, that's not great. So look at that. That's weird. So revenue's up 25. That's an incredible number. 50 billion of revenue. But net income fell by 50%. Was that real? That was real, huh? So the margins just collapsed. I wonder what happened there. But anyway, they're interesting. They're Chinese though. Um, Let's see. Jing says ASTS. So yeah, to be honest, this is like a space company that I don't see too much good fundamentals in this one. I think they have some like future contracts in the future. Let me actually view that. So yeah, look at this right here. So revenue was 1 million this quarter. Next quarter, the revenue is expected to be 25 million. And the quarter after that, it's expected to be 30 million. So the growth is really going to come from next quarter. So these next 2 quarters, if anything, are the most crucial quarters of reporting. So expect the next very volatile 6 months. They missed on revenue this quarter by like 80%. So look, like this company is kind of a startup right now. They do 1 million in revenue a quarter. I mean, 1.1 million of revenue. They lose a lot of money. 130 mil this quarter, 60 mil. So I'm being careful with that one. So, but they're a space company. I kind of like Rocket Lab, RKLB a little more. Tencent and NetEase are superior. I completely agree. Y'all want to hear the best Chinese stock of all time? And I only own one Chinese company, and I'm considering making it two and buying this stock right here. So, um, any gamers? Okay, that felt so cringy. Anyway, they own a lot of popular games. Like if you heard of Riot Games, so they own League of Legends, which I think is like top 5 most played games in the world. They own League of Legends, Valorant. They own PUBG. They own Supercell, which owns Clash of Clans, Clash Royale. They own 50% of Fortnite. So there's a huge conglomerate, and they own a bunch of stakes in a bunch of companies. Like they own 10% of Snapchat, 10% of Instacart. Like they own stakes in like everything. So this is honest. If this was an American company, they would be in the Mag 7. I'm like for real. Hey, what up, Gumbo? What up, Gumbo? He said, how's it going? He says, can we look at Krispy Kreme? I feel bad if you own this company because there's a chance of this company going bankrupt. So it had a lot of losses this quarter they had a partnership with McDonald's, and the McDonald's partnership abruptly ended. Basically, McDonald's was selling Krispy Kreme donuts in some stores, and I saw news reporting, some like Reddit posts of McDonald's owners. It was like, yeah, we did the test for 6 months, and we maybe sold like one donut every 2 months. Like it wasn't a great result. So they had some losses from that. But anyway, yeah, whoa, no, they lost 440 million this quarter. Look at the market cap. That's devastating. That's why there's real bankruptcy risk here. The whole entire company. It's like a worldwide known name, Krispy Kreme. They're only worth 600 million, and that's because they're priced to go bankrupt. It's very unfortunate. So yeah, dang, they lost 40 mil this quarter, 30 mil. Even if we just look at their operating profit, because that was a little one-time adjustment from the losses, but they're losing 20 mil a quarter, just not great. Anyway, I don't think I'm going to buy that one at all-time lows. It's tough, man. It's tough. All right, so yeah, GG Krispy Kreme. What's the most undervalued? What is your most under? Oh man, I am not AFK TikTok. Okay. All right, just had to fill out a CAPTCHA proving I'm not AFK on TikTok Studio. So okay, we're back. Um, I don't really know what probably a really undervalued. Not really undervalued. There's not much great deals, but progressive stock is somewhat decently valued right now. And hey, Dad Pearl again. Thanks for all the gifts, man. You just keep on giving me a lot of gifts. I really appreciate that. For the 10 dolphins. Thanks so much. He says, you think someone's gonna buy out Krispy Kreme? Maybe, but probably I don't know. It's like buying a company that losing a lot of money. I don't know. I wonder what would happen if McDonald's just fully outbought them. But let's look at Hims right here. This is kind of a meme stock, kind of not, but they're really growthy. So one reason why the stock has basically been declining a lot is because they lost their partnership with Ozempic with Envio. So they used to sell on their website a weight loss prescription, and it led a lot of the growth that they've had. And basically, Envio out of nowhere abruptly ended the partnership. They no longer sell any sort of weight loss prescription on their website, and that's probably going to hurt their future growth. So if we look at the revenue, it's great for now, like incredible for right now. Revenue's up 73% year over year, like record quarter. Free cash flow was great. Oh, actually, free cash flow was negative, but that actually doesn't matter too much. We really just look at the net income here. Net income was incredible. They're making like 200 mil plus on net income a quarter from now on at this rate, up 200% year over year. Revenues up 72, so they're growing their net margins, and also the assets went up with the liabilities. So they basically issued $1 billion of cash for $1 billion of debt. So look at their cash. It went from 300 mil to 1.1 bill. The assets went up with the liabilities. No big deal. But I think the reason the stock is selling off because investors are worried about the future and the future growth rate of the company. Yeah, Krispy Kreme, that happened. If we look at Krispy Kreme stock right here, they've already tried that. This they IPO'd. This is their second or third time IPOing. They IPO'd in 2021. They were already public back in like 2008, and they got delisted and bought out. Then they went public again. It's just a lot of shenanigans. Yo, oh wait, now NVO is doing direct to consumer sales, so they don't need Hims. Wow, that's actually really interesting. So yeah, this is the company I was talking about right here. They own Ozempic. If anyone's heard of Ozempic before, it's that weight loss prescription. Elon Musk is on Ozempic, and this is their stock right here. And now, oh look at that, gets Canadian approval to. Okay, anyway, yeah, if we look at where the revenue comes from, 94% of it is their obesity care products, which is Wegovy and Ozempic. They're printing money, 4.2 billion. So they used to sell Ozempic on Hims' website. Now they just cut out Hims and just sell it on their own website, direct to consumer. So pretty smart of them. But Hims sells a lot of different other stuff than just weight loss prescriptions on there. Different other prescriptions. Dunkin' by Krispy Kreme, that'd be interesting. I remember the Dunkin' and what's Baskin Robbins merger thing. Anyway, ASST, what is this one? Let's check it out. Asset entities. So, yeah, we don't really cover these kind of stocks in here. If you look in the top right, you see market cap. They're only a $66 million company. So that's just a very small market cap. You can't really trust that kind of company. They're losing millions every quarter. So, I mean, yeah, I just stay away from that one. I want to see this one, though. Nvidia, what up, Ainup? He said NVDA. Let's check it out. So I do like Nvidia stock. I own AMD, but I still am also bullish on Nvidia. I love this company. Dang, they're down 3% on the day. So let's go check this out right here. So obviously we know Nvidia, they have a huge GPU market share. So they have a 20% PC GPU market share, up from 18% the previous year. The automotive revenue, like Lucid cars, are now using Nvidia's automotive software for the autonomy driving. And the 1.2 billion of Lucid cars Uber just bought is using Nvidia's automotive software. Kind of competes with Tesla, kind of cool. But anyway, best point, or the bottom line here, the best part about Nvidia is the net income they make. Oops, sorry, my Wi-Fi is kind of bugging right now. I wish this would load faster. There we go. So yeah, they're making like 20 bill in net income a quarter, and look, it just keeps on growing. After growing 600% the previous year, grew another 26%. So it's anyway, the growth is slowing a little bit, but still going to keep growing. All right, let's see here. United Health, is it a good stock? It's a tough one to buy, and if you wanted exposure to this stock, I recommend like getting a very small position, like a quarter of a quarter size position. Don't do a meaningful amount. The reason the stock gapped up right here is because Warren Buffett bought the stock. He actually bought the stock around here at the 315 to $20 level, and it was only disclosed until 2 days ago. But with United Healthcare, we're a member. We use OptumRx. The OptumRx business continues to grow. It's up 19% year over year. I mean, look at this annual growth rate. I mean, this might be why the government's not too happy with them. Went from 35 bill for the full year 2020, it was 35 bill. Now it's 133 billion. Wait, wasn't it? Yeah, it was 38 billion this quarter. They did just this quarter what they did for the full year 2020. Just anywho, and dude, the United Healthcare business is even bigger. You guys, I think it's like 300 billion of annual revenue for them. I mean, they're just in a whole different league. But I do know, again, the government regulation is not in their favor. Yeah, look at that, 298 billion of revenue for the full year 2024. Anyway, you get near 3% yield here, but even with that, the net income is expected to collapse another 30 to 40%. So I would not have that as a meaningful size position, but like a quarter size position. Hey, if Warren Buffett did his research on it, hey, dude, someone said do Cisco. I love this stock right here. I use a lot of Cisco products for my college work and stuff for their security, but Cisco, ever since their acquisition of Splunk, I think this is just such a great company. And I'll show you this right here. If we look at where first off, look at this multiple. They're trading at 25 times net income. I mean, that's pretty fair, especially comparing that to like Nvidia and a lot of other stocks. They're trading at 25 times net income. But look at the security business. This is what I love about the company, the growth of this. And it's mainly come from the Splunk acquisition, which was genius to them. I think they should acquire more cybersecurity stocks. But anyway, if we look at this net income, they're pretty much making 3 billion or close to 3 billion of after-tax net income every quarter. Then they also return 60% of that to you as a shareholder via dividends. You get a 2.5% dividend yield. Do they do share buybacks? They bought back 1% of the company. So hey, better than diluting you. Bought back 1% of the shares. Factual said OKLO. So this is it. And Open Door is not great. It's kind of like a short squeeze stock right now. I might look at them. I don't love them though. Actually, Open Door is begging for lower interest rate environments for them to finally go up. Oh, we can look at Astera Labs. Remind me to look at that one. But here's OKLO. This is the nuclear energy startup. So what was his name? Sam Altman or something? He used to be the CEO of this company. Then Sam Altman quit. I forget what time it is around. The stock tanked like 10% on the day. But anyway, the stock's just momentum with all the other nuclear names. Out of all the nuclear stocks, though, if I wanted exposure, well, I do have exposure to one, but this one's a startup. Like I said, they have. Look, if we go to their revenue, it says no data because they've never sold anything, never sold a product or a service. They lose millions in net income a quarter. Luckily, they have a phenomenal balance sheet. Thanks. If you're wondering, like, whoa, how did their cash pile just double? Well, that's because they've diluted you as your shareholder an insane amount. Because that's the right thing to do with the stock being at all-time highs. Issue shares at a nutty valuation, just because all the nuclear names are going insane momentum, like Talon Energy, Constellation Energy, my second largest holding in here. This is the largest nuclear energy reactor play. This company right here, CEG, has a better chart, but they own the most amount of nuclear reactors out of any other publicly traded stock, literally 50% of the U.S. fleet. So out of all the nuclear stocks, I would check out ticker symbol CEG. I'd wait for them to come a little lower, though. And look at that. We get a little dividend from them. Again, I don't buy these stocks for the dividends, but cool little, buy me a couple McChickens or something. Someone said, Stera Labs, my biggest missed opportunity. Oh, yeah, we can go back to ALAB. Let's do it. So, and someone said, Nathan, please check I don't know what that one is. We'll look at WLFI. Hopefully it's not a microcap, but let's see. I've never heard of it. Here's Astera Labs, though. If we look at their financials, I mean, they deserve to be at all-time highs. Is Starlink publicly traded? No. Thanks, I'm losing money from that. Oh, hey, what up, IDK, bro? Yeah, RIP UNH. But here's Astera Labs. The stock is nearing an all-time high. They are down 7% on the day. I'd love to see this one, go under this gap so I can maybe buy the dip at 140. Here's why they deserve to be at close to all-time highs. They're so growthy. This is what I love to see. Look at the revenue. Literally went from 76 million to 191 million, up 150%. We look at the net income as well. Mm. They actually made 50 million of net income on this. That's a great quarter. 50 mil in net. They're profitable. 50 mil this quarter, 30 mil last quarter, 20 mil last quarter. So they're going to be consistently making net income from now on, and it's going to continue to grow at this growth rate. I mean, what's a net income going to be at this time next year? And they have a fortress of a balance sheet. This company has no debt whatsoever, a new record amount of cash, $1 billion of cash, up from 830 mil. So that is the recipe for a stock being at all-time highs, doing incredible. Super growthy, revenues up 150%, net income positive, growing their margins. They're growing their net income, growing their net margins. Fortress of a balance sheet, no debt whatsoever, lots of cash, growing their cash pile, and their free cash flow's growing like crazy. I mean, everything about Astera Labs is just incredible in my opinion. So that's one I'd put on the watch list. I don't know about buying them right now, but I like them. Hey, they're down 7% today. This is not Robinhood. Or maybe actually I was just on Robinhood, so maybe you're right. But yeah, this is Robinhood. This one isn't. Wait, dang, did the market just fall more? Let me see the Qs. Dang, look at the QQQ right now. We're at a new intraday low. No, don't look at your portfolio right now. Dang, Qs are tanking right now. That's not great. Nvidia's down 3. Robinhood's down 6.5. SoFi's down 5.5. Palantir's down 9. I mean, yikes! A lot of these mid caps are, and I guess everything's just getting wrecked right now. Luckily, we have some defensive names like McDonald's. Look at that. McDonald's is up 1% on the day. And another stock that's up on the day is Coca-Cola consolidating. Coca-Cola, the bottler, really, hey, look, there's all my buy orders. They're up a nice 2% on the day. I've been talking about this one for a long, long time. Ooh, someone said T-Mobile is up. That's another one. So I wish I could pull up the comment, but T-Mobile, Warren Buffett just sold all his shares. Warren Buffett just sold like 2 days ago. He sold every single share that he owns, his entire stake. But I'm not selling out of my shares. I mean, they're an incredible company. Actually, I made a TikTok about it. Actually, if you go to like my second or third most recent TikTok, is there an Epic Game stock? Yo, Tory Potter, is that you, Harry Potter's brother? So let's see here. But technically, yes, you can get exposure to Epic Game stock through Disney. So did you know Disney owns, if you've ever played Fortnite, you'll see all the Disney collaborations, like the Family Guy skins, all the Marvel superhero skins. But Disney owns, I think it's like 30 or 25% of Fortnite in Epic Games, which owns Fortnite. So they own like 25% of Epic Games. So Disney is one way to get exposure to Fortnite. Yeah, Palantir is super down. Not great. All right. Can you check SoFi? Yeah, man, SoFi was just down 5%. Very unfortunate. I love McDonald's. Yeah, dude, McDonald's is like a recession resilient company. See, I own McDonald's for days like today, like in Coca-Cola as well. I know they don't grow like all my other stocks, but it's good to have them as a diversified little holding that I can trust and rely on. So, Eyes said, can we look at Zeta? So not Meta, but Zeta stock. So let's check it out right here. They're down 4% of the day, but they did have some really good earnings. They gapped up on earnings right here. And I'll show you why I personally like this company as well. I see why people like this one. They're really growthy. Do you have an alt account? I actually do not. Someone said you have an alt account. Someone just texted me. By the way, no, this is my only account. I'll never follow you. I sell nothing. I sell nothing. I have no course book, WhatsApp. I got nothing. I'll never DM you or follow you. Watch out for people impersonating me. The only thing I do have, if you want to support me, only thing I do have is a YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, and I'm streaming on there as well. So if you miss anything, you can watch it on the replay, or you can just watch it from YouTube. That's the best way to support me because TikTok keeps taking out my live streams. But anyway, revenue's up 35%, and look at these net income losses. The losses narrowed by 55%. So yeah, this is my only account on TikTok. So yeah, watch out. Except for my YouTube channel, but that's not. Anyway. Yeah, net income is down 55% year over year, which is great news. The losses narrowed at a faster rate than the sales grew. So anyway, they also have a fortress balance sheet as well. The liabilities, look at this. The liabilities used to be 65% of the assets. Now it's only 38% of the assets while growing the assets. I mean, great news. Anyway, I see why they gapped up on earnings. I hope you're right on Palantir. Wait, what did I say about Palantir? What I've been saying about Palantir is even after this 8% low dip today, they're still too overvalued for me to put a meaningful position in them. So here's a cool stock. Yeah, Rich Tech Robotics is not a good one. You do not a great one. Yeah, hey, thanks for that, Jello. So, Rich Tech Robotics, if you're looking for exposure to a robotics company, and if you're like, I love the robotics industry, how do I get exposure? Well, this is, in my opinion, not one that interests me as a really good robotics play. I mean, if you look in the top right, the market cap, they're a $300 million micro cap. So think about this: you're buying a $300 million company, and the business does 1 million of sales a quarter. I mean, it's kind of hard to trust this one. So they do 1 million of revenue a quarter. Uh, I mean, I'd rather buy an Amazon, a Symbiotic, something like that. Luckily, they have a good balance sheet thanks to them diluting the shareholder. But yeah, they're losing 4 or 5 mil a quarter. Not great. Oh, exposure, dude. That's a good analyst. Exposure XP. Let's see. Is Salesforce? Hey, what up? Wait, I want to look at this one. It's Leo. Good to see you too, man. He said SoundHound AI. This company, if you're a shareholder of this one, it's kind of a meme stock, kind of not. But there's one thing you really want to watch about this company. Nvidia used to own this stock. Actually, this day right here, Nvidia owned this stock. Then Nvidia actually sold out of, or they owned the stock. Then they completely sold out of it. But if you're a shareholder of this stock, there's one thing you want to watch, and that's really the subscription business, which is 75% of the revenue. Look at the growth. I mean, it used to be nothing, 600,000, a nothing burger. But look at the growth of it now. It's at a new record, up 781% year over to 32 million, and this is all reoccurring revenue, subscription revenue. So, I that's what you really want to watch. Or they did beat on revenue expectations. Analysts were expecting 32 mil of rev. They made 42 mil of revenue, but they are still struggling with net income positivity, losing about 40 to 50 million in net income a quarter right now. But subscription revenue growth is huge there. Oh yeah, so yeah, tough day to be a VKTX today. Yep. So if we look at the stock right here, VKTX, best pharmaceutical stock. I don't think it's VKTX. So check this out. They're down 42% of the day. Basically, they got right around here. They got FDA approved to sell a prescription, and now that prescription is breaking news now that they can't sell it anymore because there's side effects. Look at this: Vikings Therapeutics weight loss drug hurt by side effects. So not those side effects aren't good if it's setting the stock down 42%. So anyway, that's actually devastating news for the company because they already don't sell anything. If you go to the revenue right here, if we go to the revenue, it says no data because they've never sold anything, never sold a product or a service, and they're losing 60, 50 mil a quarter. Loss are getting worse. So not great. So I don't know if I don't think I'd buy the dip on that one. So I took a high position in Sound on AI. Yeah, hey, I really like the growth of that subscription business. It actually was better than I thought. So, hey, what up, Des Mouse? He said, what are your thoughts on SEHD? Yeah, those are great dividend ETFs right there. Those are some of the better ones. There are a lot of worse ETFs out there that I see called. Those are two of my favorite covered call ETFs. But yeah, SEHD, this is the Charles Schwab dividend ETF. You get a near 4% yield. Yeah, a 3.75% dividend yield. And here's all the here's all its holdings that it owns. Like Pepsi, a lot of the higher yielding names, like a Chevron, a ConocoPhillips, and AbbVie. Yo, one of my favorite healthcare picks is probably AbbVie. Man, this one should return like 8% of your money back a year, not financial advice. Great healthcare play, and half that through a dividend. You get a 3% yield on AbbVie, and it's completely sustainable. But Home Depot, Amgen, Verizon, here's like some of these stocks are tough buys. Like Verizon right here. If we go to Verizon, a lot of people are like, I love this one, 6% dividend yield, let's go. But they have a nice 6% yield, and it's definitely sustainable for now, but they have like a 60% payout ratio, but Verizon is the exact same stock price that it was back in 1997. So some of these higher yielding names sacrifice real growth and appreciation for the yield. So, but yeah, you're right. Those are good for retirement. AMD is down today. Yeah, AMD, I do own that one. Let me actually check on that. Dang, AMD is down 5.3. Dave is down 7. Reddit, look at these. These are not great. My SoFi is down 5.6. So not good. Let's see. Should we analyze AMD? I do like that one. I really like HNST. What up, Thermo? So the thing with the Honest company is they are a really, really small company as well. I like their net income this quarter. So if you kind of look at the top right here, the market cap for the Honest company, they're a $420 million company. So kind of think about that. The whole entire company is only worth $400 million. But, and they just sell a commodity. They just sell diapers and wipes, and they're not that growthy. Or 65% of the revenue is diapers and wipes, but the revenue only grew by 0.4% year over. I think investors wanted more growth for, this kind of company. Revenue only grew by 0.4. But luckily, good news, they did make some net income and they're debt free. So they made 3 million net income this quarter. Um, and they have $72 million of cash with no debt. So like literally 20% of their market cap is just their cash on hand. So there's some good and bad news there. Yeah, hey, there's a lot of red today. There's a lot of red today, but it's not red enough for me to buy the dip really on anything yet. I need lower prices, and I would love to buy more Amphenol Group at 105. Which dip should I buy? Hey, I'm being patient. I'm not buying anything yet, but it's close. Starbucks. Ooh, and wait, what was that stock I just saw? Salesforce. Okay, yeah, I wanted to get to Salesforce right here. So a lot of the software names have been getting hurt hard. Like we look at Adobe, uh, kind of ServiceNow, Workday, Workhorse. Both of them actually, but software names are getting hurt. Like Salesforce is literally the same price that it was back in 2020, and they own some of the best assets out there. Like they own Slack, for example. Look how diversified the revenue streams are. They're in services, sales, platform, integration, marketing. But I think they're hurt by the AI thesis. They're saying in 10 years from now, AI could potentially replace a good portion of Salesforce revenue. That's kind of the same with Adobe. Like on Adobe, we might not need Photoshop in 10 years if AI can do it for us or something like that. Who knows? But investors also weren't happy with just the slowing growth of the company. Like from now on, basically in perpetuity, I, analysts really expect the business to grow like mid-single digit, like 7-8% a year without M&A. And the net income, the profits only grew by zero point 0.5. The free cash flow only grew by 3.5. Still a great quarter, 6.3 billion in free cash flow. But I think investors want just more growth on Salesforce, and that they actually just acquired a company yesterday, I believe, or today. So yeah, so Salesforce acquires Rigello to end manual work. So that's actually good. So Salesforce is kind of getting past this issue by acquiring companies. If we go to ticker symbol INFA, Salesforce just bought this company. If you're wondering like why is the stock flat like this, that's because Salesforce just bought this company. So if we go to this company's financials, this company makes what is it? 400 million in revenue a quarter. Every single quarter from now on, they just 400 million of revenue a quarter is now going to get added to Salesforce. So that should help Salesforce grow even more. Pretty cool. Um, all right. Let's see. Is September the best time to buy the dip? I mean, you should always be buying the dip, dollar cost averaging kind of, let's do AMD and CoreWeave. Let me look at CoreWeave, then we'll do AMD. So if we go to NVIDIA's portfolio, a major shareholder for CoreWeave, of course, is NVIDIA. So here's CoreWeave right here. They've kind of been struggling. Look at that, down 7.5% on the day, struggling. There's some good news and bad news about the stock. The good news is how growthy they are. Check this out. Like the same time last year, there was 400 mil of revenue. Now there's 1.2 billion of revenue, up 200% year. I mean, these year-over-year growth rates are incredible. But bad news is they're burning through a lot of money. They're losing a couple hundred mil of net income every quarter. So I do want to see those losses start to narrow. But I love the growth there. As long as they keep that growth up, it should be somewhat sustainable. So let's look at AMD as well, man. Yeah, I love AMD, man. This stock right here. What happens is, yeah, hey, by the way, yeah, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so we'll both actually get some 5 free stocks if you deposit $100. Or you can just type it into Google. It's a brokerage called Moomoo. But anyway, link tree in bio first link. So here's AMD. Yeah, they're down 5.4% on the day. Obviously, we know they have a huge GPU market share. Check this out. 17% PC GPU market share. Look at their client and gaming revenue. That grew 69% year over year. Another big growth driver for them, and it's another 42% of the business, is the data center business. So as we know, data centers need GPUs, and AMD's in a great position where they make GPUs themselves, so they can get them the quickest models, at the lowest cost, the quickest. And look at this. The free cash flow number was ridiculous. 1.7 billion of free cash flow this quarter, new record. Also, net income was 880 million, up 200% year over year. They have another monster balance sheet, no net debt here. So yeah, really great quarter for AMD, I believe, but they're just being momentum. They're at a bit of a high valuation. So someone said, can you do Dutch Bros? Yeah, I luckily know the ticker symbol for this stock right here. Yeah, if you guys got any stocks you want me to look at, let me know the ticker symbol and I gotta check it out for you. Like we can look at NXST. I want to try and get to all these. Sorry if I don't get to all the stocks here. Oh, and there's Marvel Technologies. Yeah, Marvel's like the cheapest chip play. Yo, Jesse, what up, man? Happy Tuesday. Yeah, hope you're all having a good day. If y'all want to hit the follow button, by the way, we stream every single day. I sell nothing either. I have no course book. All right, so anyway, here's Dutch Bros, like a Starbucks competitor. Their company operated shops are, 92% of the business. And look, for a restaurant in this environment, this is pretty good. It's up 29% year over year to a new record. So record sales quarter. Yeah, so sales are up 30%, net income's up 70%. So that means they're growing their net margin, 9% net margin. For a restaurant kind of business, you really focus on the margins, and it's great news that they're growing their net margins. So they made nearly 40 mil in net income this quarter. So great news, they're growing. But I think the whole industry is a bit tough right now. Like if you look at Starbucks, their margins are being collapsed. They have a higher margin than Starbucks does right now. So here's Nexstar Media Group. I think they own like some news channels or something. What's the yield on this company? Wow, yeah, look at that, a 3.5% dividend yield. And look at the payout ratio. This is great news. I rarely see this. The payout ratio is only 31%. So if I had to guess, this company's trading at like a low PE, like a 10 or something PE. Let's go see. Price to net income is a 10. So yeah, kind of like I thought. So they're trading at 10 times net income. The industry average is an 8. Who's in the same industry? Tegna stock, Gray Television. Anyway, so yeah, they're kind of like broadcast. So kind of a cable. They own like some news channels or something like that. I don't know. So anyway, wait, hold on. Let's see. So the net income fell 14%. Was that real? It was. So yeah, so this isn't great. The sales fell by 3. Net income fell by 14. So the margins did slip a little. But still, let's go see how much the dividend cost. So they made here's how you can do this. They made 91 million of net income this quarter. Let's go see how much the dividend costs. So they made 91 million net income, and look at that. The dividend only cost 56 million in 56 million in net income a quarter, and they're also spending even more money on buying back their own stock. They're spending spending over 100 mil these quarters just buying back their own stock. So pretty cool company. So, oh yeah, GE Veranova. This is another energy business. The electricity demand in PJM, there's record auction prices. So, GE Veranova, Vistra, Constellation Energy, all these stocks have been booming recently. So yeah, if we look at their so they're in the power, electrification, wind business, and look at this net income right here. Great news. They're printing money, a couple $100 million of net income every quarter, 500 mil this quarter, 300 mil last quarter. So pretty cool. They create towers for cell phones. Wait, gibberish. What stock were we talking about there? I don't know. They own towers. NXST? Maybe they do. Oh, Nexstar. Oh, they create towers for cell phones. Oh, broadcast. That makes sense. Okay. Thanks for that. Actually, I did not know that. I was a little confused at what they did. Appreciate that. Ooh, let's see here. Someone said Oracle. Yeah, what up, some? So ORCL, they're a huge cloud play. If anyone wants exposure to the cloud business, Oracle has been a huge winner. They have like huge investments from like SoftBank as well. So you get a nice yield, 0.7% dividend yield. But check this out right here. Cloud and license revenue is 85% of the revenue. But the best part is the bottom line here. They're printing money, just over 3 billion of net income every single quarter. So I love the profits on them, but I do think they are a bit overvalued. Yeah, SoFi's down 5%. Yeah, Kevin, RIP. Should we look at SoFi? Clorox? What? Clorox stock? I don't know if we'll look at Clorox. We just looked at SoFi. I'll be quick about SoFi. You know what? Let's see. Let me go back to my position. So yeah, we do own SoFi, by the way. Yeah, look at that. We're down 5.2% on the day. Robinhood's down 6%. Reddit's down 5%. AMD's down 5%. So RIP the portfolio. Make sure to drop a like on the stream if you want. So here's what I love about SoFi, though. Here's why I'm not selling my position. They're so growthy. They have their own banking charter, which are so hard to get. They got it through a loophole. But look at their financial that's now patched. But look at their financial services. It's up 105% year over year. Incredible growth. That's a kind of company that I can trust and that deserves to be doing really good. So financial services are up 105. Lending revenues up 30. So both main segments of business are growing like crazy. So yeah, if we look, revenues up 42, but net income, they made 100 million in net income. They're making nearly 100 million of net income every quarter. People are really starting to take SoFi serious. They're really growthy. They're making a lot of money. Uh, yeah, Tencent Games owns Riot Games. You're right. You're right. We just looked at them actually. So let's look at Intel right here. So the government, it's official. The government took a 10% stake in Intel yesterday. The stock fell on that news, but then today, like SoftBank or something said they invest like 2 billion into Intel. They're getting some commitments from other company to buy stakes as well. So that's really explaining why the stock has been booming so much, which is honestly game changing for this company because without that, this company was like just not great. So it's great news that the government is in the stake. It's like game changing because Intel is literally the same stock price that it was back in what is this? 1999. So this is really good news. Coster said AG first majestic silver stock. Okay, so yeah, silver is not done as good as gold. So I guess basically if you want exposure to the commodity of silver, you could check out this stock right here. I mean, they actually haven't done too good, lower than what they were in 2019. Uh are they let's see. Um oh, so these are all their mines. I guess they own a bunch of silver mines. Maybe they get some gold as well. But look at the revenue. Revenue's up 100%. They made 56 million net income this quarter. That's great. So anyway, like a precious metal mine play. Uh yeah, let's see here. Symbiotic. Yeah, here's a robotics play. This is that warehouse robotics play. They're down 7% on the day. And their main customer is actually Walmart. So they do warehouse robotics with Walmart. They have like over 1,500 patents. If you go to the shareholders right here, they have such a meaningful partnership that Walmart decided to buy 13% of all the shares. So Walmart is the second largest shareholder of Symbiotic. And look at this right here. Revenue's growing nicely. Revenue's up 25% year over year. Unfortunately, they are still losing money right now, but it's not that much. So it's actually not too big of a deal. The trend is getting better. So anyway, they're probably my second favorite robotics play. My first favorite robotics play would probably just be Amazon since they're such a conglomerate. Obviously, it's not a pure robotics play, but how have you been? Yo, what up, applesauce? Yo, how have you been too? Good to see you. I think Cheesecake Factory is some of the best balance sheets for any restaurant company. Hey, Thermo, should we look at the Cheesecake Factory? My bad, I just saw that. Let me know if you're still here. I'll check it out for you. So here's Rocket Lab stock. This is honestly my favorite space stock. And hey, Denise, thanks so much for the rose. Or the gift. I really appreciate that. So here's Rocket Lab. My favorite space stock. I'd buy this one over ASTS, Space Mobile, and Lunar. Look at the revenue of their space systems. It's up 27% year over year. It's just seen some very nice growth. They also have a huge backlog. Let's see, launch services as well. If we go to the launch services revenue, that's up 59% year over year as well. So both main segments of business are growing there. They also have a huge backlog, like literally a $1.5 billion backlog of orders that they haven't fulfilled yet. And they just acquired some company, I forget, but it was like a couple hundred million. Lukey said what app is this? Yeah, hey Lukey, I'm on a brokerage right here where you buy like stocks and stuff. If you want to get this app I'm on, it's my favorite app for analysis and stuff. You can see like the super investors portfolio. It's in the link tree in my bio, the very first link there. It's also an affiliate link. So if you sign up and deposit $100, we'll both give 5 free stocks. Or you don't have to though. You can just go to Google and type in Moomoo. But yeah, my favorite brokerage, lowest fee app. Anyway, let's keep going here. Actually, this is a cool company. WEL. This is Welltower. Probably never heard of this stock right here, but they do senior housing care, like senior housing care facilities like that. Yeah, look, senior housing operations, and they do some triple net leases as well. They're in the real estate business. Triple net lease is a pretty cool business, but yeah, their senior housing operations is where most of their revenue is, and that's kind of whoa. Look at the growth, dude. The revenue is up 39% year over year of the revenue, so growth is amazing. Revenue's up 39. They're making a couple hundred million in income every quarter. Yo, Mushy Unicycle, thanks so much. I'm gonna give you a follow. I appreciate that, man. Hey. So yeah, if we look at this right here, they're making a couple hundred million net income every quarter. Phenomenal balance sheet. What's the yield? A 1.6% dividend yield as well. So yeah, that's a senior housing play right there. And they've been doing great. They're nearly at an all-time high. Look at that. So someone said this is actually kind of a risky stock, and here's how we can tell if it's a dividend trap. Oh yeah, hey Thermo, yeah, we'll look at Cheesecake Factory after this. So here's United Parcel Services. If we look at this company's dividend, a lot of people see this and they're like, oh heck yeah, 7.5% dividend. You're supposed to get like 7 to 8% of your money back just from the S&P 500 on average every year. So if that was sustainable, that'd be great. Here's how we can tell if that dividend is sustainable. So look at the net income they made this quarter. We'll round it up. They made 1.3 billion of net income this quarter. Let's go see how much a dividend cost. Here's how you do that. You just go to the cash flow statement. You scroll down to the cash paid dividend, and the dividend cost 1.35 billion of net income a quarter. So they literally did not have enough money to afford the dividend this quarter, and literally all their profits are being like gobbled up from the payout ratio, the dividend payout ratio. So this company has no leftover money to like pay employees, do stock buybacks, reinvest in the company. So they're gonna have to issue debt or dilute the shareholder, and they can't really dilute the shareholder right now because the stock has done terrible. So honestly, I don't think I'm going to buy the dip. I think they're primed for a dividend cut, and a dividend cut would actually be good for them. So let's look at the Cheesecake Factory. Let's do it. So any good buys today? I actually have not bought anything today. I gotta look out there for some good deals. But I'm waiting for stocks to fall a little bit lower. But has anyone heard of the Cheesecake Factory, that restaurant? They got like 100 things on the menu. I love the Cheesecake Factory. They had like this cucumber lemonade. I usually go there every year on my birthday. But anyway, Cheesecake Factory, good dividend, 1.7% dividend yield, safe payout ratio. But yeah, look at that. The Cheesecake Factory, 71% of the revenue. This net income number is great. I mean, they're making like 40, 50 million in net income a quarter. So uh, this net income positivity is great news. So yeah, the revenue is up 5% year over year. So yeah, they do nearly a billion of revenue a quarter, making net income. So yeah, one thing, and some other stocks that have been doing really good is like ticker symbol EAT, Brinker International. So I believe this company owned. Look at this one as well. Ticker symbol EAT has done like way better. They own Chili's. Look at that, Chili's stock. Baby back ribs. Is doing really good. Also, oh, is it Darden? Is it DRN? Ah, let me just type it in Darden. DRI. Okay, Darden Restaurants. So this is another one that's kind of, you might like this one. They have some really good performance. They own Olive Garden and Longhorn Steakhouse. Those are two really popular ones. So Longhorn Steakhouse and Olive Garden are ticker symbol DRI. Anyway, let's get out of the restaurants. And I will say my favorite restaurant is McDonald's, ticker symbol MCD, because they're really a real estate royalty company. Anyway, sorry, let's keep going here. Yeah, what is going on in the market? I feel you, man. My portfolio over here is tanking. Uh, AMD's down 5, Dave is down 7, Reddit's down 5, Robinhood's down 6, SoFi's down 5. So yeah, RIP all my holdings in here. Sprouts Farmers, some of these defensive names like insurance name, Progressive is up. T-Mobile, Sprouts Farmers Market. The Sprouts Farmers Market is like a healthy grocery store. They're doing really good. And the chicken egg producer, ticker symbol Calm. I love Calm. They're the largest chicken egg producer in the U.S. They have like a 25% market share for all U.S. chicken eggs. And y'all see the chicken egg prices, so they're printing money right now. So anyway, let's keep going here. Let's get back to the analysis. Ooh, you know what? Here's another. You're looking at a restaurant. Here's more of a food company. So let's look at Hershey's. Oh yeah, Luke. We'll look at TSSI. What's up, Luke? Good to see you. So I actually own TSSI. Um, oh well, yeah, we could look at Elf Beauty and NVO too. So here's Hershey's. They have honestly just been hurt by input cost from cocoa. If we look at the actual commodity price of chocolate, cocoa, where they grow it, because it can only be grown in certain places, there's like a drought over there. The commodity of chocolate is like absurd. It's really high. So if we look at this net income, their margins have collapsed because of the squeeze from the high prices of cocoa. So yeah, they really made like 100 mil of net income this quarter. Not great. Like lowest net income they've had in many years. Only 100 mil this quarter. Again, thanks to gross margins fell 25% after falling 12%. So that's kind of why this one's been struggling recently, but they have a nice yield. What's the yield here? Yeah, 3% dividend yield. It's not really a 50% payout ratio anymore, but yeah, I'm kind of staying away from that one. The one food stock I do own that's kind of related is ticker symbol TAP. Um, they sell drinks. I can't say what kind on TikTok, but uh, let's look at TSSI right here. So I do own this company. I might be biased, but they've been struggling. Again, whenever I talk about this stock, I always say that you cannot have the stock as a meaningful position. So look at this in the top right. They're a $390 million company. They're a microcap. This whole company is worth $300 million, $390 million. But here's why I bought them. Yeah, they're worth $390 million, but they're making, their net income positive. They're actually making a couple million every quarter of net income. And at these growth rates, I thought it was going to grow a little bit more. It only grew 5%. I was kind of disappointed with that. They did miss on a lot of the analyst numbers, but yeah, the revenue growth was insane though. Went from 12 mil to 43 mil, and which is really significant when you're a $300 million company. Here, I'll show you my position in them. Again, I own was it $100 position maybe? Yeah, TSSI. I have 6 shares of this one, and it's worth $86. Anyway, some of these risky ones, you just can't have a meaningful position in this one. So let's see. Yeah, let's get back to this one. Elf Beauty, and then we can look at Invio Novo. So here's Elf Beauty. This is, a beauty and cosmetics company. They've kind of been taking a lot of market share from Estee Lauder. So if we look at their annual sales right here, I mean, look at this. Used to be just 200, 300 mil a quarter, but this is fiscal year, but same 12 months, but 1.3 billion of revenue for the past year. I mean, incredible. I mean, just huge, just growth of the business, taking market share away in the beauty industry. But they are, and good news, they're making a lot of net income every quarter, but the net income has fallen a bit. Their margins are being squeezed a little bit. Like if you look at Estee Lauder, the whole industry is kind of going through a rough spot. But luckily, this company is making net income every single quarter. Good balance sheet as well. So actually, if we look at Estee Lauder, it's instead of ELF, it's only EL. Yeah, look at this stock as well. It's kind of, and dang, that's lower than it was in 2017. It's tough. Corey said, what about DKS? So yeah, this is the, I don't think I can say the first word, just in case by the way, thanks for being here. Best way to support me is watch the stream from YouTube. TikTok takes down my streams all the time for random reasons, and it's really annoying. So, but this Dick's Sporting Goods has done really good, man. This stock is surprisingly good. Look at that. Let's go analyze them. Let's see if we can figure out why they're doing so good. So let's look at revenue right here. Revenue's up 5%. Net income is down 4%. So, wow, they did a bunch of buybacks. So look at that. You get a 2% dividend yield with this company, a very safe 31% payout ratio. But check this out right here. Here's the part that's really cool. So look at that. They made $260 million this quarter. They're making on average $300 million of net income a quarter. What are they doing with all that net income? Well, they're buying back their own stock like crazy. They bought back $300 million this quarter, $100 million of their stock last quarter. So they're just such a buyback friendly company. Yeah, $400 million that quarter. So they're just buying back their own stock like crazy and rewarding to you money via dividends. So what's the multiple? What's the PE of this stock right here? So even though the stock is at an all-time high, they're trading at 16 times net income, and the industry average is 21. So there could potentially, hey, Harry Potter or Tory Potter, this one, I could see it even going a little higher, that the 16 PE multiple, it could maybe stretch up to an 18 or a 20 PE, hit a new all-time high before it maybe starts to come down. Hey, Edzilla, good to see you, man. He said ticker symbol AZ. What is this one? So a small one. Dang, Jay said, today made me cry. Dang, Jay. Don't worry about it. But anyway, this is a $300 million market cap, very small company. So, then we got to look at Invio. So very small. So yeah, look, they lost 12 mil this quarter. Let's hope they have good sales growth. So yeah, nothing's really blowing me away here, to be honest. I mean, they're doing they did $1 million of revenue, only up 1%, and they lost 12 mil this quarter. So it's a tough buy. They have a decent balance sheet, probably from issuing shares, but what do they sell? Precision metal parts. Let's see how that's down 6%, and then smart cards. I love the dip. I hope it goes deeper. Me too. I do. I hope we get a good dip. Oh, so actually, here's another interesting twist of events. So all this company's revenue comes from Israel. So again, for the full year 2024, they did 7 mil of revenue. All that 7 mil came from Israel. So they're an Israel company. Interesting. They're kind of like Perion Network, actually, down here. Ticker symbol PERI. Where does all their revenue come from? I think. Oh, actually, no. This company is headquartered in Israel, but most of the revenue comes from the U.S. Sorry. What is this one? SPMO. What up? New to the room? Hey, what up, Valley? Good to see you, dude. SPMO. Invesco S&P 500 Momentum ETF. So, wow, look at that. This thing is at an all-time high. It's done better than the normal S&P 500. What does it own? So, if you put $100 in this ETF, $11 goes to Nvidia. Then this is interesting. The second largest holding is in Meta. Wow. So, then $9 goes to Meta, 9 to Amazon. So, notice Microsoft and Apple are nowhere to be seen on this list. Kind of interesting. So, it's not like the S&P 500 without Apple and Microsoft. Oh, haha, Etzilla. Hey, no. Oh, that's my fault. I just now reread that. He said from Arizona. Oh, I'm so slow. Hey, good to see you, Edzilla. Hey, I went to Arizona one time and I went to a Dutch Bros and had In and Out for the first time a long time ago. Uh, I've been there once. Scottsdale. Let's see. Nvidia Semiconductor. Hey, well, I don't like this one. The only reason this stock is where it's at today is because of Nvidia. This company was literally priced for bankruptcy. They were at $1.50. But then, if you're wondering what's this huge candlestick from, Nvidia had a huge partnership with this company, saving them from bankruptcy. Because if we look at their financials right now, they're not good. I mean, revenue's down 30%. Only to 14 mil. Lost 50 mil this quarter. So if it wasn't for that, then I like In and Out. Yeah, me too. Me too. Uh, look up these for me. Microsoft. Let's see. Yeah, we can look at a few of these. Or one. Or let's just go with Microsoft. So yeah, Microsoft. This is obviously the world's second largest company. It's like a perfect buy and never sell stock. You just want to buy Microsoft, never sell it, and then just forget about it. So, yeah, I don't have an In and Out like within like 1,000 miles of me or very far away from me. So look, I love how diversified Microsoft is. Like they have the productivity and business, which is like Microsoft 365. And then they have this huge cloud business. The Azure cloud has seen a lot of growth. I mean, look at this on an annual basis. I mean, it just hits a new record. If you look at it in the most recent quarter, it's up 25% year over year to 30 billion. I mean, that's high margin as well. Great news. I mean, half the revenue comes from the US than other countries. And look at this net income. I mean, they have a better credit. Like this, according to S&P Global and Moody's, it is safer to buy Microsoft than it is to buy US Treasury bonds. Some bonds backed by the US. So, I mean, look at this right here. I mean, they're literally making, they made 27 billion in net income this quarter, up 23%. The revenue's up 18, net income's up 24, so that means they're growing their net margin. Net margin grew by 5%. They also have this Microsoft 365 subscriber, and they just rose the prices of it like last month by like 25%. So what's the name of this? Yeah, hey 100. This is actually a brokerage that I'm on right now where you like buy stocks and stuff. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. It's a brokerage, and or you can just type it into Google. It's a brokerage called Moomoo, but it's also an affiliate link too. So if you sign up and deposit $100, we'll both get 5 free stocks. So yeah, it's in the link tree in my bio, first link there. It's my favorite app to do analysis on. Most useful features. You can see all the super investors' portfolio, like Nancy Pelosi. They got to make all their trades public by SEC law. And you can kind of there's a feature where you can like follow them into it. And you can set your weighting and stuff. Anyway, kind of cool. Favorite brokerage, lowest fee. Anyway, let's see. Hey, they're not paying me, but I do have. It's an affiliate link. So if you actually sign up, we'll both get like 5 stocks if you deposit $100. So full disclosure. But anyway, let's keep going here. Let's see. Oh yeah, NVO and. I forgot NVO right here. This is that weight loss company that owns Ozempic. Elon Musk is on Ozempic. It's that weight loss company. So, yeah. And look at that. There's a headline. No, Ozempic gets Canadian approval So I guess that's good. That's why the stock is maybe green on the day when S&P is pretty red. So yeah, if we look at this, 94% of the revenue comes from their obesity care products. So yeah, pretty much all the revenue comes from Ozempic and Wegovy. And look at the profits it's bringing them in. I mean, they made 4.2 billion of net income this quarter, up 45% year over year. Revenue's up 23. So the revenue's up 23, but the profits, the net income's up 45%. So that means they're growing their net margin 17% year over year. You also get a 3.2% dividend yield. I mean, that's a really nice yield. So one thing that has been hurting them, if you're like, why has the stock been trending down so much? Do know their patent for Ozempic does expire in a couple years. So yeah. Hey, what up, Lowell? What's up, man? Uh, let's see. How about Arista Networks? What's the ticker symbol for that one? Let me know the ticker. Is that ANET? Let me just. Oh yeah, Arista Networks. Yo, this is the company that prints net income. Look at this. So this stock's at an all-time high right now. They pretty much, in my opinion, deserve to be at an all-time high. Look at this money that they make. So they sell just products and services, but look at the product revenue. It's up 31% year over year, literally to a new record. I mean, if we zoom out, the revenue just hits a new record every single quarter, every single year. So that's, a company you can trust. And if we just look right here, I mean, look, revenue just hits a new record every quarter, but look at this bottom line number. I mean, they literally made 888.8 million of net income this quarter, up 33%. I mean, the profits are ridiculous. They also have a phenomenal balance sheet, great free cash flow numbers. Geez, what's the actual free cash flow? It's over pretty much $1 billion a quarter, even better than the net income. So, great. Do you work for Moomoo? No. Let's see. Circle. Let's see. I'd love to though, but let's see. Hims. Oh yeah. Hey Danny, this is a company that, speaking of Ozempic, they used to sell Ozempic, that weight loss prescription, on their website. Now they no longer sell it, and it's going to hurt the future growth of them. So, can you trade off your phone? Yes, sir. I could, we could buy some Hims right now if we wanted to. How many shares should we buy? No, just kidding. But yeah, Hims, they're down 5% on the day. I still like this one because look at the growth. I mean, revenue is also at a record, up 73%. These are incredible year-over-year growth rates, and this is why a lot of their hype is justified because they're so growthy. And again, the future growth is really why they're selling off right now, with the loss of not being able to sell the weight loss stuff. But anyway, revenue's up 72. They made 42 million net income. They're going to be making like 50 million plus in net income every quarter. 200 mil plus in net income a year. They also just rose some debt, but they rose cash. The assets went up with the liabilities. So this is no big deal, this balance sheet change right here. You go to the actual cash on hand. If you're wondering, that's how the cash went from 300 million of cash to 1.12 billion of cash. So anyway, I'm being careful with that one. Actually, the risk reward's starting to look better. What's the app? Yeah, hey, Alex, this is a brokerage right here. Again, if you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. So let's see here. Saint said, have you done BULL? So yeah, this is Webull. So yeah, this is kind of like a Robinhood competitor. They just IPO'd. That's what this huge little spike up right here was. This was their IPO date. And check this out. I remember going on their website. Their share structure is a bit complicated, but here's what I like about this stock. So first off, the revenue is up 31%. So revenue grew by 30%, but look at the profits. They made 13 mil this quarter, 10 mil last quarter. So they are making net income. That's the good news. Hopefully they'll continue to keep making net income every quarter. So yeah, and I also have a Webull account. So hey, I've given them probably a lot of transaction fees with my account over here. We're up 14% all time, definitely underperformed. But yeah, look at today. We're down 5% on AMD, 4% on Reddit. Oh, Dave's recovered a bit, but yeah, look, Robinhood's down 5%. SoFi, my SoFi's down 4%, RIP. But anyway, and yeah, Webull's down 4% as well. So yeah. Let's see. Do you use Fidelity? I do not actually. Is Bitcoin still worth holding? I think Bitcoin's an asset that you just want to probably never sell. Don't fully sell out of all your Bitcoin, always hold a little bit. You never know what'll happen, What's your average on SoFi? Yeah, oh yeah, I like being fully transparent. Yeah, we're actually up a good 288% gain on SoFi. I regret every share I've ever sold to this company, but yeah, we bought SoFi way back here. So yeah, we've been holding on to this company for a couple years. Same with like Robinhood. We've been, this is one of my longer term accounts. I just like to buy and hold stuff in here for the long one. Like Reddit has done incredible lately. FoodTube, man, as well. This is another Webull Robinhood competitor stock. I just choose to own them all. It's such a great industry. The brokerage industry, they're all printing money right now. And this one's only trading at a 22 forward PE. I bought into SoFi at 22. Yo, you got a great cost basis. Well, that's a pretty good cost basis, yeah. You are still green. Yeah, Palantir's down 8. Yeah, RIP Palantir. Yeah, I'm just holding on to the rest of my SoFi forever. Ooh, here's a really cool stock actually. Someone said Wingstop. So yeah, Wingstop right here. This is another royalty business, kind of like McDonald's. So they're up like crazy from 2019 on like Starbucks and some other like a Papa John's Pizza, Krispy Kreme, Wendy's. They're all below their 2019 price. But sorry. The cool thing about Wingstop is, though, I want to actually see if it'll break this down for me. As it used to. Let me go back to here. Yeah, so look at this. Their royalty revenue franchise fees are half their business. So half their revenue, okay, because their company-owned stores are only 20% of the business, but half the revenue, kind of like McDonald's, comes from the royalties that they collect. So you go spend $100 at any Wingstop. I'm not sure the exact royalty, but if it's like McDonald's, $4 or $5 of that goes back to Wingstop as a high margin royalty. And yeah, they're making like 40 to 50 million in net income a quarter. So basically, they have their royalty structure, which is half their business. If you're like, whoa, that's not a good balance sheet, what's up with that? Those are intangible assets. So this doesn't make sense. That explains it. So look, Wingstop's a huge company. Do they only really have 700 million of assets? No, they actually have a lot more, but they're intangible assets, which that's a whole discussion for another thing. But anyway, Wingstop's in a great position. I do really like that one. But I would probably pick McDonald's. So, oh yeah, Kava's another interesting one. They're kind of like a Chipotle for the competitor. Hey, thanks, Mushy. I appreciate you, man. No, yeah, yes, sir. Let's see, Open Door Technologies. Open Door, this is kind of a meme company right now. I mean, they're begging for low interest rate environments because they sell houses. And if we go right here to the revenue, actually, the losses are narrowing. This is one good news. The losses narrowed by 60%. So they're still losing money, but it's narrowing, which is great news. But if we go to the revenue right here, look at 2022. They were doing 4 to 5 billion of revenue a quarter. 3, 4, 5 billion of revenue. Now, it's only 1.5 billion. So as soon as we get into a lower interest rate environment, which could be delayed, that's when I think this stock will finally have some returns. I think it's too momentum right now. I definitely wouldn't even touch this stock close to the. I mean, I'd maybe consider it at $1.80 or $1.50, but it's tough. It's real tough. All right. Domino's Pizza. Hey. Actually, I want to. So this is an interesting one. Well, y'all know Wendy's, right? Wendy's, the restaurant. Can y'all believe this? They've been struggling hard. Wendy's is the same stock price that it was back in 2003. So you bought Wendy's in 2003, and you're not doing too good. So I feel bad if you own Wendy's. They've just been struggling because they don't have the nice franchise model like Wingstop and McDonald's does. Oh, but anyway, let me get back to Domino's Pizza here. Domino's Pizza, this is another kind of recession resilient. They've been a monster performing. I mean, look at that stock price. I mean, it just historically goes up every year. But in a recession, I've heard this argument. I don't know how true it is. You can feed a family for a pizza cheaper than, I don't know. Anyway, but yeah, if we go to the net income right here, let's see what it is. 100 mil plus a net income a quarter. It did fall. Oh, it was a one-time adjustment technically. So they're making 150 mil of net income a quarter. Another balance sheet talk. But yeah, they're making 150 mil of net income a quarter. Let's go see how much the dividend cost. The dividend only cost 59 million. Okay, yeah, so 59 mil a quarter. They combine the two quarters right there. Anyway, but they're buying a lot back of their stock as well. Actually, hold on. So the net income fell by 7.6. But the net income per share only fell by 5.4 thanks to the share buybacks. Yeah, I agree, Pookie. Wendy's is expensive for no reason. like way more expensive than McDonald's. Like a singular burger is like $8 or so. It's like I'd rather get like 4 McChickens than Anyway, I love McDonald's. I got low standards though. So let's see. What's this one? What is Tonix? You know what? Is that Tonix Pharmaceutical? Yeah, so TXNP. Oh, so yeah, another really micro cap at all time lows. A $300 million company. We don't really like to touch these names. $300 million market cap. Do they have sales? Hopefully, no. I mean, the sales are 2 million, down 10% year over year, losing 20 to 30 or basically 20 million a quarter. That's significant when you're only worth 330 million and you have no sales. So yeah, I mean, to be honest with you, you can never buy that stock. Even if it keeps on going lower and lower, I mean, it can't really. Yeah, no problem, Jack. Yeah, I try to cover everyone's stock here. And sorry, I go like relatively quick with each stock. So I try to get to everyone's MCVT. And by the way, yeah, I do not have a second account. Watch out for people impersonating me. I sell nothing. I have no course, book, Discord. I'll never follow you. I'll never DM you. So watch out for people impersonating me. This is my only account. Uh, so here's another really small one. $400 million market cap. Yeah, I'm not too sure what this is. Mill City Ventures. Something happened right here and the stock exploded. Without that news, I can't really tell you much, unfortunately. Revenues of 900,000, 20 million of assets, no debt. So it looks like a good balance sheet. It's like a fund or something where they like acquire companies. I don't know. That one just is a little confusing. Very small company. I'd be careful. Hey, Crazy said AppLovin stock. Yeah, APP stock. I love this company right here. They're so growthy. They deserve to be doing this good. They deserve to be at all-time highs as well. So if you look at AppLovin right here, pretty much the stock looks like it's at all-time highs. They deserve it because look at this right here. If we just look at the sales, the revenue is up 77%. So revenue's up 77, net income is up 160. They made 820 million of net income just this quarter. If you look at the FCF, which stands for free cash flow, 772 mil of free cash flow, up 70% year over year. Both segments of business are growing incredibly at AppLovin. This is a huge advertising play. So yeah, and they're just super growthy. And that's why they deserve the high multiple, the high PE. They are still, I don't know if it's worth buying over 400. Under 400 would be ideal, but because the PE is a bit expensive here. But I love their fundamentals. Great financials. One I trust. So Roblox stock, let's see. You know what? Yeah, let's pull Roblox. So, that's in Kathy Wood's portfolio. Um, So why is everything down today? I think it's just like momentum, to be honest. I don't know if there's any specific news today. Yeah, maybe just ahead of the Fed meeting, and I don't know. Sometimes you just get days like that where even the news doesn't know why the market's falling. It's just some I don't know. But anyway, here's a back to Kathy Wood's portfolio. 5.5% of her portfolio is in Roblox stock. The reason they fell this day is because they're like in some safety lawsuit from Louisiana. But check this out. Here's a really cool stat that we get here. This is their daily active users. So not like monthly active users, but their daily active users are 111 million. So they're 111 million this quarter, when the same time last year it was only 79 million. So daily active users went from 79 to 111, really good growth. But one thing I don't like about this company is the fact that they burned money. Well, actually, technically, they don't burn the money. It's the shares that they issue to pay employees is why the stock is down. So look, they're making free cash flow every quarter, a couple hundred mil of free cash flow. Uh, but the net income is negative by 300 million because of the stock-based comp. Stock-based comp isn't included in free cash flow, but it is in GAAP net income. They're literally paying their employees 300 plus million of stock a quarter, um, worth 300 million of worth of stock a quarter, and that gets shown up on the GAAP net income. So yeah, we were at all-time highs last. Yeah, man. See, if we like this dip that we have today, actually, let me go to Robinhood real quick. Let's see. We are down 0.34%, not great. The Qs are down 1.25, a little bit of a bounce recovery. But yeah, if we kind of zoom out here on the QQQ, it's like, oh, where's the dip from today? We just had a pretty monster performance. So it might just be momentum, who knows? But yeah, if we look at that, dang, my whole watch list is red. Apple even went red. Nvidia's down 3, Tesla's down 2, Robinhood's down 5, SoFi 4, Palantir 9. Bonds are up, TLT is up, so that's why McDonald's and Coca-Cola are green. And hey, United Rentals too. I heard someone say United Rental stock. Yo, Supreme. If you go to, by the way, best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio, but you can just go to YouTube, type in Nathan Robert. My most recent YouTube video is a 10-minute video where I fully go over just United Rental stock. So check out my most recent YouTube video. By the way, I'm also streaming on YouTube. So that's also the best way to support me. Head over from the YouTube stream or head over from TikTok to the YouTube stream. And if you missed anything, you could replay it after the stream's over. Anyway, yeah. And you can, yeah, basically YouTube channel is called Nathan Robert. Best way to support me is just hit the subscribe button. I sell nothing, no course, book, just on here, give my opinion. None of this is financial advice either. So let's see here. Lowe's or Home Depot. To be honest with you, out of the two, I'd probably just pick Home Depot. This one I love. I mean, they're kind of related to the home builders. A lot of people, whenever the home prices are doing really good, they shop at Home Depot, and they with the mindset that it's an investment in the house. And anyway, they do good with the home builders. They're doing great now. You get a great dividend, a 2.3% dividend yield. The payout ratio is only 60%. So they raise their dividend every year. Like in 2021, you got paid $6 every year in dividends per share. Now you get paid $9 every single year in dividends. So like you're getting paid like 40% more income than you were just 4 years ago. So that's what's kind of cool about dividend growth companies. You know, if you rely on that for income, you just got pay raise. And look at this net income. They can easily afford that too. I mean, they're making $3 to $4 billion in net income every quarter. It is down year over year just because the whole housing, high interest rate environment market, but they're still making $3 to $4 billion a quarter. Great. Roblox CEO is going to sue someone on the platform for, oh, that's interesting, Gombo. Huh. That's interesting. Can you check CNC for me? Yeah, what up, Titanic? Let's see. Centene. I think this is the Medicaid stock. This is the next domino to drop after United Health. They're another Medicare, Medicaid business, I believe. Yeah, so look, 60% of the revenue comes from Medicaid, then Medicare. So again, heavy regulation around this industry. United Health is feeling it. And what are the EPS estimates? So yeah, if we look right here, they're expected to lose net income next quarter and lose $1.30 net income the next quarter. They're basically expected to just lose money for some time now. So you're buying a company so the multiple is technically infinite. So the PE, it says the PE, the price to net income is a 7. Well, they're expected to lose net income the next whole year. So that the PE is technically like extremely expensive. It's going to go negative. So it's tough. Let's hope the net income doesn't go as negative as they say. Should I buy United Rentals right now? It's tough at $900 Supreme Court, but I do think United Rentals is going to $1,000 a share. Just got back from Home Depot building my garage shelves. Hey, Adrian, nice. Hey, Adrian, you should buy some Home Depot stuff. Take a little profit on the qubits, right? Take a little profit on the quantum names, and collect that dividend income. I think Home Depot does some share buybacks too. Let's see. No, never mind. They have not. So let's see here. Let's look at some more stocks. SPX, is that just the S&P 500? That's just the S&P 500 index. So yeah, basically just the S&P 500. They're not on an exchange. So you want to buy an exchange traded fund, an ETF. That's just an index. You want to buy, if you're on a brokerage like me, you would buy VOO. It's the exact same thing, ticker symbol VOO, exact same holdings. It's market cap weighted. So its top holding is Nvidia, then Microsoft, Apple, Amazon, Meta, Google, Tesla, all that. So, all right. So, hey, watch out. Oh, hey, don't hold on. Watch out. There's someone in the chat who's impersonating. Hey, yeah, watch out for that. Watch out for that guy in chat. Hopefully it deleted his message. There's no way for me to just delete the message. So hopefully TikTok deleted that message. What platform are you using? Yeah, hey, Carlitos, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this little app I'm on, brokerage, it's in the link tree in my bio, the very first link there. It's also an affiliate link too. So if you go and deposit $100, we'll both get 5 free stocks. It's my favorite app, most useful for stuff. But let's see. SNYR. What's this one? SNYR. So Synergy, CHC. So, yeah, we don't really cover these kind of stocks. If you look in the top right here, they're a $34 million company. So this whole entire company is only worth $30 million. So they're in nutraceuticals. nut, wait, nutraceuticals, something like that. I don't want to try and pronounce that again, but this isn't great. They do have more liabilities than assets, more liabilities than market cap. Luckily, it looks like they're making net income. I mean, that's hard to believe, but I think they are. I think they're making net income. So that it's hopefully they can continue to keep that up and keep making net income. So that does take some risk off the table. I'd be super careful with that one just because it's a very small market cap. So yeah, selling nuts or something. I don't know, man. So let's see. Ryan said UNHG. So not UNH, but UNHG. Oh, they released this at the right time. So here's the UNH2X ETF. So if you don't want to, maybe if you're like, I'll buy a call on United Health, instead of buying a call, you could just buy this ETF right here, which if United Healthcare goes up 1%, this goes up 2%. It's a 2X. But if it all goes down 1%, it goes down 2% as well. Sin hired the old Pepsi CEO. Oh, that's it. Wait, SNYR. Oh, they're in nutrition. Oh, then that's interesting. I wonder what they do. So what about Netflix and Eaton? Yo, remind me to look at Eaton. I love Eaton. They're a electrical company, infrastructure play. So here's Netflix right here. Netflix stock is at an all-time high. They deserve it too because they're so growthy. I mean, and they're growing their margins as well. I mean, we can see their premium subscribers. This is a cool metric we get. Their premium subscribers were 260 million. Now it's 301 million. So they have 301 million active subscribers. And look at the net income they're making. And this is the crazy part. So revenue's up by 15. So the total revenue grew by 15, but the profits, the net income grew by 45. So that means they're growing their net margins. I know they just increased the price on Netflix and they're doing the password crackdown, or that actually is like old news. That's like a couple months ago or a year ago. But anyway. Looks like it's doing wonders on their margin. I know they got Squid Games, did great for them. Barely paid the Squid Game founders, and they made it. Anyway, let's go to Eaton right here. So this is an electrical company. Look at that. Yeah, they've kind of been selling off the past couple of days here, just with the whole market. But let's see. They have a nice yield. So look at that. You get a 1.2% dividend yield with Eaton. Pretty cool. Electrical Americas, and look at this. They're in the aerospace industry. How's the aerospace business? Yeah, it's up 12% year over year. So the aerospace business is doing good. Vehicle industry, yeah, vehicles, that's down 15%. Not shocked about that. But let's go to net income. So revenue's up by 10%, but net income fell by 1. Was that real? Technically not, but they're making pretty much $1 billion of net income a quarter, 15% net margins. Not bad. I like Eaton. It's like a good dividend growth stock. They're a blue chip. I'm going to get Netflix. The one thing about Netflix is, though, Netflix is very expensive in its valuation. They deserve the high premium. So, and I trust Netflix, but I do think the valuation is a little high on Netflix, but I love Netflix. It's like a great buy and hold forever stock. Oh yeah, you know what? Let's look at this one, Jaylee. Yeah, we'll look at Johnson & Johnson now, J&J. So yeah, Johnson & Johnson is seeing a lot of gains from the Shockwave acquisition. I wonder actually if I can pull that up real quick. Shock. They're delisted now. Yeah, SWAV. So Johnson & Johnson acquired Shockwave Medical, which again is now delisted, but they got a steal of a deal. They're obviously up like crazy from 2019, but this is such a great company, and they got it for like $13 billion. Actually, let me just get back to analyzing this company, though. They have way more other businesses. That's a very small portion of the business, but this is a great buy and hold forever stock as well. But I think it's a little boring. It's not going to outperform the S&P 500 in the long run, but it's still worth owning and just never selling. But look at the yield here. You get a basically 3% dividend yield here. The payout ratio is actually a little lower than 84%. It's including some of the lawsuit payouts from last year. But yeah, the PE is a 19. Innovative medicine and med tech. Yeah, if we go to the net income right here, they're making a couple bill every quarter. I mean, this was a one-time adjustment, but they made $6 billion last quarter. They're pretty much making $4 to $5 billion in net income every quarter. What happens to your money if the ticker gets delisted or suspended? If it gets delisted, it's because it either got bought out by another company. So you're either going to get the cash for those shares, or either get a bunch of cash. It'll sell it for you, or it'll convert to the new shares, like in the case of INFA right here, or Shockwave and SHO. So if you held the stock and then it got delisted, it converted into Johnson and Johnson shares. So yeah, but sometimes you just get a bunch of cash. So Nvidia, yes or no? Nvidia explain. Oh yeah, let's look at Nvidia. So yeah, this is another great just never sell stock. They're down 2.8% of the day. Um, this is what Nvidia, yes or no? I think this is a yes in the long run. This is like a great never sell stock. Valuation is a little high right now. Before I buy, I would wait for it to come down a little bit, but here's what I love about them. First off, we obviously know they have a huge GPU market share, a 20% PC GPU market share. They have a lot of automotive revenue now that's kind of competing with Tesla. And a lot of the revenue comes from the data centers. It's genius. Nvidia makes their own chips. Data centers need chips. So that's why it's smart for them to get into that business. Also, the profits they're making are ridiculous. Nearly $20 billion in net income a quarter. And it just hits a new record every quarter. So, look at this. If we zoom out, they used to be making 2-3 billion a quarter. Then in 2023, it collapsed. And now, just in the most recent quarter, it's from 2 to 3 billion, now 18 billion this quarter. Anyway, Nvidia is a good never sell stock. How much dividends does your portfolio pay? Well, I got, for this portfolio specifically, it doesn't pay much, like under 1% of it a year. Because like Amazon, for example, Amazon doesn't pay a dividend. So a good, and DocuSign doesn't pay a dividend. Perion Network doesn't pay a dividend. So like a good bit of my holdings don't pay a dividend. And the dividend stocks I do have don't have a high yield. Like my largest holding in here, Comfort Systems. Here, you know what? I'll show you the dividend income. And I really hope I don't reveal anything I'm not supposed to. So filter, here's how we do this. Corporate action, dividends. Here's all the dividends I've received. So yeah, I just received $5 from Coca-Cola. Yeah, these are like very small dividends. So anyway, yeah. I get most of my dividends from other accounts. Actually, you know what? If you like seeing dividends received, let me show you the dividends I've received in this account. So yeah, here's my Webull account, by the way. Here's us year to date. So year to date, so since January 1st, this portfolio has paid me $91 in dividends from like $8 from Disney, $8 from T. Rowe Price, Molson, Clear Secure. Has anyone heard of Clear Secure? It's like that authentication thing in the airports. Clear Secure stock, Maine. Anyway, let me get out of here. No, don't worry. I didn't show anything sensitive. Actually, I was joking when I said that. So yeah, don't worry. Thoughts on RILY? Thoughts on Rich Tech Robotics? Yo, I do not like Rich Tech Robotics. I think that's one you want to just stay away from. But RILY stock, yeah, I don't know what this one is. If you look at the top right, $190 million company. That's a very small market cap. Communication segment. They're in wealth management, consumer products. They're so like diversified that sometimes it's not good. Like they're so kind of all over the place. Let's see, net income right here. Revenue down 59% year over year. Yeah, they're just losing a boatload of money, unfortunately. Yo, Michael. Let's see. Citron Research argues its valuation is significantly inflated. OpenAI. Oh, you're talking about Palantir. I read that exact same. I read that this morning. By the way, Michael, I think I saw you on Meet Kevin's stream. Cool. Anyway, but Palantir stock, yeah, they're down 9% of the day. And there was, yeah, Michael said that OpenAI, their $500 billion valuation, if that valuation is that high, apparently that means Palantir should be worth like half of what it is or something like that. I don't know. Yeah, Citron Research issued bearish commentary on the stock. So I guess one little person's commentary really sent the stock down 10%. Again, here's what's so cool about Palantir. Again, I agree this is a ridiculously overvalued company, but here's what I love about them. If you look at where the revenue comes from, half the revenue comes from the government. The government revenue is at a new record, up 50% year over year. So the government revenue is at a new record. The commercial revenue is also at a new record, up 50% year over year. They just had their first ever $1 billion quarter, $1 billion of revenue this quarter. And out of that billion, 330 million of that was net income. So 33% net margin. They have no debt at all, zero debt, $6 billion in cash, up from $4 billion the same time last year. So I just love Palantir, but I don't love the valuation. Can you look at Hawaii Airlines? What is the ticker symbol for Hawaii Airlines, Colin? I've never heard of that one. Anyone know what app he's using? Yeah, hey, Wag1. This is actually a brokerage right here where you buy stocks and stuff. If you want to get this brokerage I'm on, it's in the link tree in my bio, the very first link there. It's also an affiliate link. So if you go and deposit $100, we'll both get 5 free stocks, full transparency. Or you can just type it into Google. It's just a brokerage called Moomoo. Yeah, oh yeah, hey Joshua here. That's for the TikTok. Here, it's in the link tree right there. Very first link if you want to get it. But anyway, let's see. What up, Darla? Let's see. GWAV. What's this one? GWAV. Green Wave Technology. Oh, this is that micro cap. So yeah, here's the really risky thing. And here's why me personally, I just stay away from these stocks. I just can't trust them. I mean, if you look at the top right here, the whole company's worth 10 million. So, and the stock's at an all-time low, but the whole entire company is worth $10 million as a market cap. And think about this, they lost 18 million of net income just this quarter. So, and then 5 million the quarter before. So it's just like there's real bankruptcy risk here. You see this quarter where it says they made 7 million? They didn't actually. Let's see, did they sell an asset? Not yet. That was a little gap net income trick. So they're losing millions every quarter. They're probably going to keep on going lower to zero, but it's tough. It's tough. Are lithium stocks dead? Pretty much, Joshua. Since the price of lithium is struggling. Someone said do a CoreWeave. Yeah, CoreWeave. Yes. You know what? That's a stock owned by Nvidia. You know what? If we go back to the Nvidia portfolio right here, again, Nvidia is so big, they own some individual stocks like ARM, Nebius, APLD, and CoreWeave is actually their largest holding. Out of all the stocks they own, CoreWeave is the largest stock. And what is this? CoreWeave drops sold 4 million shares. The insider sold 400 million of the stock. Short seller concerns. Huh. You know what? Let me actually see. What's the short interest? It's only 4% right now. It's not too bad. Well, oh yeah, here's kind of a cool little thing that you can kind of see. Yeah, oh yeah, the lockups from the IPO just expired. So anyway, there's some good news and bad news about CoreWeave. Here's one thing I do really like about the stock is how growthy that they are. I mean, the sales are up 200% year over year, so they're up 3x. They went from 400 mil to 1.2 bill, but they're losing a couple hundred mil in net income. Oh yeah, hey, by the way, this is a brokerage. Yeah, it's in the link tree in my bio, the very first link there. That's where you buy stocks and stuff. So yeah, if you want to get this brokerage I'm on, it's in the link tree in my bio, first link, or you could just type it into Google. It's a brokerage called Moomoo. But it's an affiliate link as well. So if you sign up with my link in my bio and deposit $100, we'll both get 5 free stocks and help a brother out. Well, you don't have to though. You can just go to Google. It's called Moomoo. Anyway, yeah. Let's see. Ooh, that's a stock owned by Nancy Pelosi. You know what? We go back to the Nancy Pelosi portfolio. Yeah, and another cool thing about this app, since so many people are asking, you can like follow super investors into them. You can like batch trade and set your weightings to copy some of these super investors. But anyway, yeah, Nancy Pelosi, she owns a big cybersecurity name known as Palo Alto Networks. Yeah, hey, Joshua, it's a brokerage. Luckily I hopped out of the lithium wagon. Hey, that's good. Sorry, my Wi-Fi is kind of bugging right now. I do apologize. I do want to pull up Palo Alto Networks. Let me back out and go back in. So PANW. So yeah, there we go. So they're up 3% on the day. This is like the largest cybersecurity name out there right now. And I love them because of their subscription model. I love subscription businesses. The revenue's all reoccurring. But look at this. It literally just hits a new record every single quarter, every year. I mean, it's a company that I could trust. I mean, this is incredible growth. This hits a new record every quarter, every year. So, and that's just the subscription business. If you go to the actual profits of the company, like here's the free cash flow. 560 million of free cash flow this quarter. I mean, they're making over 500 mil of free cash flow a quarter. The net income's a couple hundred million too. So I just love this as a cybersecurity name. My next favorite cybersecurity name would then be like a CrowdStrike. But yeah. Can you share 2 micro dividend stocks? Micro dividend stocks, like really low yielding stocks. Like here's one, for example, Comfort Systems, my largest holding. They only have a 0.22% dividend yield, but only an 8% payout ratio. They raise their dividend every quarter. So, it's 50 cents, then 45, then 40, 35, 30. It's pretty crazy. But that one's a tough buy. But another one I really like is Coca-Cola Consolidated. And again, I love looking at the dividend payout ratio. This is how you know a company has a lot of room to raise their dividend. So this is a higher dividend yield than Apple. You get a 0.7% dividend yield, and the payout ratio is only a 5%. So they could double their dividend or even triple it to a 15% payout ratio. That'd give you a near 1.8% dividend yield when they do that. They can't afford to do that right now. They just choose not to. That's my only green stock on the day. Look, everything's red except for Coca-Cola Consolidated. This is the Coca-Cola bottling company. So yeah. Um, so this is a company, you know what? I'll analyze them anyway. So to be honest with you, if we judge Tesla the exact same way we would any other stock, I'm not loving Tesla's valuation. So obviously, Tesla, look at this PE. They trade at 196 times net income. So they're trading at 196 times net income. And it's okay to have a high valuation as long as you're high growth. And unfortunately, Tesla lost its growth. If we see their total vehicles delivered, it's actually down 14% year over year. We can see the deliveries by model and all this stuff. But if we just look, 88% of the revenue comes from their automotive business. The automotive business is down by 12% year over year. And if we look at the energy business, it's down by 7%. So both main segments of revenue declined on Tesla. Same with the margins. The margins fell as well. And they technically had a one-time adjustment to their net income. They did a little gap net income trick. They made $1.2 billion in net income. The operating profit was only 900 mil. They pranked us. They only made really like 750 mil of net income. But anyway, Tesla, again, and I get this right here. The bulk of their market cap, this huge valuation, comes from the growth in the future of the robotaxi and the robots. So yeah, you're basically buying Tesla now is like you're buying into the story of robotaxis and robots in the future. And I can totally understand that. And it kind of Elon Musk, Elon Musk, he could maybe do some good stuff for the stock. What about S that popped last week? Wait, are you talking about Sentinel One S stocks? So let's see here. Where'd you learn the stock info? Oh yeah, Joshua, I've just been in the market for many years. I've read books, YouTube videos, and by the way, I don't have a course or anything. If you want to learn from me, best way to learn from me is just come to the streams, watch YouTube videos. If you miss anything, by the way, you can replay it on the YouTube stream. I'm streaming on YouTube as well. If you miss anything, you can replay it. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But let's look at Sentinel One right here. This is a tough. I think I can figure out the reason this stock is at an all-time low right now or close to it. And someone said, yeah, there's rumors of this company being bought out. But here's the bad news: is that they're losing. Look at this. They were losing 70 mil a quarter. This quarter they lost 200 million. So I think investors aren't just happy that they're just burning through money right now. But revenue is growing very well. Revenue's up 23% after being up 40%. So really good growth there, but we want to see them finally make some real profits for the shareholder. Sorry, what website did you say this? Oh yeah, hey, I'm on a brokerage right here. Yeah. If you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. You buy stocks and stuff. So yeah, or you can just type it in at Google. It's a brokerage called Moomoo. Oh yeah, hey, hello. Right there, first link there. Do you analyze normal current? Yeah, I don't do Forex. I don't trade off different currencies, but it's just too complicated for me. I love dividend investing. Like, I love companies that return money to you, like companies that buy back their own stock, pay dividends, do M&A. I mean, that's what I love. And, I just love stocks. It's my, Tina, there is no alternative. Like, it's not as passive as real estate, Real estate is not so always passive. Let's see. I bought some Sentinel One at $30 rib. Oh dang, man. Exact Sciences. Wait, is that what? Wait, EXAS. What's this one? So yeah, Exact Sciences. I think this is another gene splitting company that I don't think has been able to do it yet. So this stock is the same price that it was back in 2017. And I think that's because they might be a startup. So, or no, okay, no, I'm wrong. I'm thinking of CRISPR Therapeutics. So yeah, this one actually does have revenue. Look, this is up 16% year over year. So revenue's up 16, but they're really close to net income positive. They only lost $1 million of net income this quarter. That's great news. But normally they're losing a lot of money. So it's good to see those losses start to narrow. I don't know. I don't know why they're struggling so much. Maybe it's just the industry right now, the healthcare industry. But they're interesting. Wonder what it's like when they'll be making net income every quarter. So LMF said JEPI. So this is a covered call ETF. So if you're looking for basically an ETF that pays monthly to maximize your dividend income, this is one that you'd buy. Again, you're not going to outperform the market in the long run. Like this stock is the same price it was back in 2021. We know the actual S&P 500 is well at all-time highs. But the reason you buy the stock is for the dividend. You get an 8.5% dividend yield, and they just basically sell calls in the S&P 500. So they're pretty cool. So, people keep saying, we just looked at Palantir, yo. Let's look, remind me to look at Palantir. Like, we just looked at them 5 minutes ago. And out of respect for people, I don't want to look at it again so fast. So here's SoundHound AI. This company, if you own them, there's mainly just one thing you want to watch. Yeah, you only watch one thing if you own SoundHound AI, and that's this subscription service. And this is now most of the revenue. How the royalties do? Royalties are back a little bit of a recovery. But anyway, look at the subscription business. This is the huge winner. Just about a year ago, it was a nothing burger. It was 500,000 of revenue a quarter. Well, now it's 32 million, up 781% year over year. At this growth rate, growing 781%, what's it going to be this time next year? So anyway, you're watching the subscription service revenue there. They are still losing a bit of money, like 40, 50 mil a quarter, but they're pretty cool. I'd still be careful. How about MasterCard and Visa? Yeah, let's look at Visa. What program? Yeah, hey, Kenneth, this brokerage I'm on is in the link tree in my bio, the first link there. So here's Visa. Hey, look, this app is telling me there is a bullish continuation wedge, and the rise probability is a 93% chance. Well, that, of course, is technical analysis. I like looking at the fundamentals. So let's go look at that real quick. So obviously, we know those Visa credit card, they have a duopoly shared with MasterCard. Those small little credit card transaction fees that are slowly bankrupting us are making Visa a boatload of money. I mean, look at this. They're making over basically $5 billion of net income every single quarter. I bet you're wondering, what is Visa doing with $5 billion of after-tax net income a quarter of extra money? They literally spend nearly all of it buying back their own stock. This is what I love, shareholder-friendly companies. So they literally spend $4 to $5 billion every quarter solely buying back their own shares. So there's less shares that exist, giving you more ownership in the company. Here's what that does for you as a shareholder. If you get this, then this is great news. Look at the net income. The net income grew by 8% year over year, but the net income per share grew by 12% year over year because the share part of the ratio went down. So I love buyback-friendly companies. Visa's great, and you get a dividend too. A 0.7% dividend. They'll raise that every year. So Visa's like a perfect buy and never sell stock. I mean, they just buy back their own stock. You own 3-4% more of the company than you did a year ago. DFLI, was that Dragonfly Energy? Yeah, $19 million market cap. Yeah, you got to be careful with the micro caps. We don't really like to cover those. LRCX. So here's land. What? Yeah, hey Kenneth, give me the ticker symbol for Bitfarm. Yeah, and I'll check it out for you if I can. I meant micro companies that pay a dividend. Micro companies, like micro cap companies. Powell Industries is one of those. I'll show you that after this if I remember. POWL. But here's Lam Research. So Lam Research, this is another kind of chip semiconductor company, and they've just been growing like crazy. Check this out right here. The revenue is up 33% year over year. So the revenue is up 33 and the net income is up by 68. So what does that mean in English? Basically, it means they're growing their net margin. They now have a 33% net margin when the same time last year, it was only a 26% net margin. That's a huge difference from a 26% to a 33%. The margin expansion on there is incredible. They also pay a dividend too. So why don't you buy Apple? Hey, I love Apple. I just don't own them. I own a lot of the Mag 7. Like I own Google, Meta, Amazon. I don't own Apple though, but I would happily own them. What happens? Yeah, hey, Wave, I'm on a brokerage right here where you buy stocks. If you want to get this little app I'm on, it's in the link tree in my bio, the very first link there. Let's see. What's their ticker? Oh yeah, here's that microcap company I was talking about. POWL. Look at this. They have a 0.5% yield, only an 8% payout ratio. They're only a $3 billion company. I do own them though. So let's see. Why is Viking down so much? Yeah, so VKTX, one thing with this stock is basically they're a startup, okay? So they've never sold anything. Right here on this candlestick, this company got FDA approved to sell a product, to sell their like weight loss prescription or whatever, but they just had results that their weight loss prescription had side effects and very negative side effects. And now, I mean, the investors don't know what to do. 40% is a huge decline because now, like, there's nothing else for them to sell. If they don't sell this, then there's nothing to the company except for their cash pile. But I mean, they have no sales. There won't be any sales now in the future. It's just really disappointing. Yeah, hey, try not to spam. Nvidia, please. Yo, should we look at Nvidia? Oh, Lamb Research. Oh, Lamb Research. Yeah, that was LRCX. By the way, if you missed anything on the stream, I'm streaming on YouTube as well, so you can like rewind it, watch it on the replay if you missed anything. That's the best way to support me, by the way. I'm really trying to build up my YouTube channel, get more subscribers over there. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, by the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram, none of that. Watch out for people impersonating me. I'll never follow you or DM you. But anyway, let's look at Nvidia right here. Yeah, I'll be quick about this one. Yeah, I got you, T. We'll look at Nvidia stock for you. So obviously we know huge GPU market share here, 20% PC GPU market share. A lot of that, a lot of their recent growth has been from the data center business. You know, data centers need GPUs, and you know, Nvidia makes GPUs. You know, Nvidia, they could like mine Bitcoin themselves cheaper and lower cost. They can get themselves the newest models of GPUs, the quickest and the cheapest. And anyway, you know, they have incredible margins. Look, 40, 50% net margins. If you go spend $100 on an Nvidia GPU, $56 of that is just after-tax net income for Nvidia. I mean, so if they get into the data center business, which they are, they basically save 50% than any other person buying the chips. But also, they're printing money, you know, nearly 20 bill of net income a quarter. And at this growth rate, what's it going to be this time next year? Obviously, we all know Nvidia, so growthy. The CapEx of the Mag 7 from like Google, Meta, Amazon, like these Amazon CapEx numbers is why Nvidia is doing so good. You know, if we go to Amazon right here, the cash from investing activities, they spent $39 billion this quarter on CapEx, you know, crazy. Oh, there's Jeff Bezos. Bezos owns 8.3% of Amazon. I love Amazon. Oh, here's a company I don't love. What up, Bart? He said American Airlines. To be honest with you, like as an investment, I don't love the airline industry. I mean, you know, COVID just like wiped them out. After COVID, they were losing billions a quarter. I mean, it's just not an industry that'll outperform in the long run. I'll be quick about this one. I mean, let's see. Yeah, like look at these choppy numbers. I mean, they make money, then lose money. I mean, it's just not a business for me. Really leverage as well, federally regulated, you know, more liabilities than assets. So I just don't love it. You know, I know some funds that are making a killing right now. You get exposure to the S&P 500 without the airlines and the cruise lines. Anyway, I just don't love that. That's a like fun little swing trade or something. What happens is, yeah, hey, Danes, by the way, if you want to get this little album on, it's a brokerage that I'm on here where you buy stocks. It's my favorite one. It's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you go and deposit $100, I'll both get 5 free stocks. So anyway, what is this one? Mountain Dew said SNAL. Snail. What is this one? So snail stock. Okay, so yeah, this is a microcap. We don't really kind of cover these stocks. You know, the whole company's worth $40 million. So, you know, it's hard to trust that as an investment. The whole company's worth 40 mil. They have sales at least. They do 20 mil of sales a quarter. Playing with net income positivity, a bit leveraged as well, but it's a Chinese company. Wait, where does the revenue come from? Well, 85% of it comes from the US. Anyway, nothing's really blowing me away there. I'd be pretty careful. Yeah, with no sales, those shares, yeah, you know what? The Viking Therapeutics reminds me of the Cassava Sciences. Is it SAVA? Yeah, Cassava Sciences, yo. Look at this. So they weren't able to, they got FDA approved, and then there were side effects, and then the stock tanked, and now it's just going to stay at zero, trade lower than their cash value. So, we just looked at CoreWeave, my guy. HWM and Palantir, PWR. Let's look at PWR. What's this one? Quanta. Oh, this one's on my watch list, actually. So, wow, look at this one. This stock is nearing an all-time high right now. So, let's go look at their financials and see if we can figure it out. So, figure out why they're at all-time highs, because usually the financials of a company explains why a stock is either doing really good or really bad. So, yeah, look at this. 80% of the revenue comes from electric, and then underground and infrastructure. But let's go see the net income. So yeah, the profits are really good. They're making a couple $100 million a quarter, and it's growing. It's up 20% year over year. So the revenue's up 21. That they're just growing. Revenue's up double digits, net income's up double digits. So I can see why this one's at all-time highs. You get a very small yield, but very small payout ratio. They do grow the dividend. So yeah, they're interesting. I can see why they're doing so good. How about Shark? Oh, is that Shark Ninja? Oh, what's the ticker symbol for that one? TTWO. Oh, yeah, I love TTWO. So this is Take-Two Interactive. This is the company that owns Rockstar Games. So if you've heard of Red Dead Redemption, GTA 5, this stock owns that. And guess what? They also own GTA 6. So they're in such a unique position. This is why the stock is like rallied up so much in anticipation of this. They have this asset known as GTA 6 that whenever they release that game, it's literally going to bring them in billions that quarter. I mean, it's GTA 5 is already one of the top 5 biggest games of all time. So GTA 6 is going to expect it to be in that list as well. So a lot of people can't wait for that game. And a lot of people are like, I heard like they'll charge $300. Like people will pay $300 for the game or maybe even a subscription. They'll sell like skins and stuff. Anyway, look at CoreWeave. Dude, we'll look at CoreWeave real quick. So basically they're down 4% on the day. Lockups expire. See, one of the insiders just sold 400 million of shares. Basically, there's some good news and bad news. A lot of CoreWeave is just owned by Nvidia. But here's the good news. This is the part I like about them is how growthy they are. Look at this. The revenue this time last year was 390 million. Now it's 1.2 billion. It's up 200%. So the growthiness of the sales is like a huge breath of fresh air. But this is the bad part. They're losing a couple hundred million in net income a quarter. Not great. Bit leverage too. So I don't know. But, NVIDIA owns them. We go to the NVIDIA portfolio. It's like 80% of their portfolio. It's just in CoreWeave. Yeah, NVIDIA is like an inherent call option on CoreWeave. But yeah, didn't they just acquire like CoreZ? Someone said, did you see Wendy's? Yeah, dude, Wendy's, if you know the restaurant Wendy's, their stock is done terrible. I feel bad if you own this one. Look at this. Wendy's is the same stock price that it was back in 2003. And this is the classic dividend trap company. They rose their dividend too high, 8.5% yield. All of their profits, literally over 100% of their profits are being eaten up by the dividend payout ratio. They have no leftover money to do like anything with. So it's tough. And I like McDonald's. That's the best one. Investor said, what app is this called? Yeah, hey, Investor, again, this is a brokerage that I'm on right here where you buy apps and stuff or buy stocks. If you want to get this app, it's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's just a brokerage called Moomoo. Well, it's an affiliate link, so if you sign up and deposit $100, we'll both get 5 free stocks. Pine Up said Keurig Dr. Pepper. So yeah, y'all know those Keurig coffee machines. They merged with Dr. Pepper, so now they're called Keurig Dr. Pepper, and they own the patent for the K-Cups. So it's kind of a cool little thing, we have a Keurig machine, and we're always ordering the K-Cups. Like it's like a subscription we basically pay for. But anyway, yeah. So look, U.S. Coffee, huge chunk of the business, 23% of the revenue. But anyway, look at the profits over here. This was a one-time adjustment. They acquired the company Ghost. If anyone's heard of Ghost before, it's like a protein energy drink company. It made they're making 600 to 700 million of net income every quarter. That was a little one-time adjustment. And with Dr. Pepper, you get a really nice 2.6% dividend yield. They raise their dividend every quarter, so they're pretty cool. I used to drink Ghost. Yeah, I haven't had a Ghost drink in like over a year. Hey, bro, don't spam there. Hold on here. I can moderate myself. There we go. So do Kongsberg. I don't know the ticker. Give me the ticker. I'll type it in. Kongs. So here it is. Oh, yeah, this is not a U.S. company, but this is an aerospace and defense company. Dang. Looks like they sold off a lot of this. Let me go see what they are. So, so here's what their revenue comes from. First off, we look at where their geographically it comes from. 31% Europe, 23% North America, then Asia, Norway, Australia. So all these other countries. But yeah, Maritime, which is like a defense. And yeah, Kongsberg, defense and aerospace as well. So look at the defense and aerospace business is up 38% year over year. That's really good growth. Really good growth on the aerospace business. How about the discovery business? That's up 21% year over year. How about this business, the Maritime? That's up 7%. So all three businesses are growing like crazy here. And yeah, look at so hold on. Does anyone know what country this is? I should know this. Dang it. Anyway, we're gonna switch their currency back to USD. But yeah, look at that. In USD, they're making 1 to 200 mil of net income a quarter. It's up 45% year over year. Oh, Norway. Yeah, dang it. It said NOR or NOK is the currency. I could have guessed that. Thank you. It's Norway. Okay, cool. So yeah, that's a Norwegian aerospace and defense company. So let's see. I rarely watch live broadcasts, but can anyone let's see. Um, what do you think of Super Micro? The truth about Super Micro is I'm not too happy with them right now, and I think they're going to go lower. So I am not buying. I own shares, but I am not buying the stock yet because I think it's going to go under 40. Hope it doesn't for everyone else, but that's why I'm not adding to shares yet. Their margin is starting to collapse. I was listening to the earnings call and basically giving customers bulk deals and it's hurting their margins. So just kind of think about this logically here. The revenue, their total revenue grew by 7.5%. So revenue is up by 7, but their profits, their net income is down by 34%. So that means the margins are collapsing here. Margins fell 40%. That's not good at all. I mean, still they're making a couple hundred mil a quarter, but it's tough. I don't like that. All right. So, Rocket Lab. Yeah. So, this is one of my favorite space companies out there. So, Rocket Lab, they have a huge backlog, first off, like a $1.5 billion backlog of orders that they haven't fulfilled yet. They're down 8% on the day. I think they're a bit highly valued. Oh, look at that. As Rocket Lab acquires Geost. So, they're acquiring a company called Geost or something. I don't know. Basically, look at their space systems revenue right here. It's been growing very nicely. It's at a record this quarter. The space systems revenue is at a record, and I think they're over here, their launch services. Yeah, look at that. It grew 60% year over year as well. So both main segments of business are growing very nicely on Rocket Lab. Still got to be careful though. They are still losing a lot of money every quarter, but they can afford it. They've really been beefing up their balance sheet too. Good news. But yeah, hey, that's basically my favorite space stock out there. Rocket. Oh yeah, so this is Rocket Mortgage right here. Um, let's see how they're doing actually. So yeah, they originate. Wait, Rocket. Yeah, direct to consumer, or maybe this is that they're a fintech something. Financial industry something. So let's see how they are doing. So revenue's up 4.5. Hmm. Net income's a little choppy. I don't know. I think this one's just like I think they do mortgage loans, and as we go into a lower interest rate environment they're really going to benefit from that. I think COOP, this is my favorite pick, Mr. Cooper. Wow, dude, they've done even better. They're at 190. Oh my goodness, I should have bought that one. Well, Mr. Cooper's the real winner here, but yeah, the Rocket Mortgage is interesting. What app are you using? Yeah, hey Christian, I'm on a brokerage right here. Yeah, if you're wondering what app I'm on, it's actually a brokerage where you buy stocks and stuff. Vladimir, or Christina, it's in the link tree in my bio, the very first link there. Or you can just go in Google and type in Moomoo, it's a brokerage. But it's also an affiliate link. So if you go and deposit $100, we'll both give 5 free stocks. So yeah, it's my favorite brokerage. I also have, Robinhood and Webull, those brokerages, but this one's my favorite. Lowest fee, best useful features. Yeah, like we can see. Yeah, you're right, Dylan. We can see the Kathy Wood portfolio. To get that, all you do is go to the Discover tab, and you go to Insights, and then yeah, you can see all the super investors portfolio, like Kathy Wood. Um, she got Robinhood, all these stocks, and you can see the performance of it, and you can like follow her into them. You can like batch trade, set the weightings and stuff. Pretty cool. Anyway, let's keep going here. Let's get back to this. How about Kraken? Did they IPO yet? Yeah, I don't think they've. Wait, KRAK or Kraken Robotics? Maybe I don't know. I can't find that one. But let's see. Qubits. Let's see. Yeah, we can do QBTS as well. By the way, I am about to end the stream here in a little. I'm almost at the 3-hour mark. My head hurts. But by the way, I stream every single day. If y'all wanted to follow button, we go live every day. And if you miss anything and want to replay it, by the way, I streamed this on YouTube as well. And when the stream is over, you'll still be able to replay it on YouTube. My YouTube channel is called Nathan Roberts, and the link tree in my bio. But yeah, here's QBTS. This is qubits. This is a quantum name. I think the valuation is just too high. Hey, thanks for the follow. I really appreciate that. Yeah, hey Kay, I'm on an app, or it's a brokerage right here. It's in the link tree in my bio, the first link there. But D-Wave Quantum just basically moves with the quantum names, which has been super momentum, super in season right now. But I just can't pay this valuation. Like, look, they're a $5.3 billion company. So the whole company is worth 5.3 billion. I mean, the business did 3 million of revenue this quarter, lost 167 mil of net income. I mean, out of all the $5 billion market cap companies, I feel like there's so many other better ones. Like, but there's better companies with lower market caps, like a Powell Industries, a Dave. I mean, I just love. Oh, yo, Nathan said LASE. We got to do that one. What does Mr. Cooper do? They're another mortgage loan originator. But Lays, yeah, we don't really cover these stocks, Nathan. Yeah, if you look in the top right, they're only a $61 million market cap. So that's a very, very small company. And they're losing millions. At least the revenue is growing, but it's 2 mil of revenue. It's tough. It's tough. But yeah. ISRG, you know what? Yeah, this is Intuitive Surgical. They're on my never sell watch list, actually. You know what? Who cares if I pull up the watch list? ISRG. So, in my opinion, they're on my buy and never sell watch list. That means like just buy this one and then just never sell it. Just forget about it. They're so growthy. They're so great. It's an industry you just want to have exposure to for the long run. They're a medical device, instruments, and accessories company, and they're so growthy. Look at this. This business grew basically 20% year over year. Well, look at this right here. Revenue's up 21% year over year. Net income's up 25. They're making 500 to 700 million in net income every quarter. They have no debt at all. Look at this fortress of a balance sheet. They have $5.3 billion of cash. So if you're looking for a healthcare company, this is one of my top picks to just buy and never sell. The PE is a little high, 66 times net income, but high PE because they're so growthy. I'd wait for them to follow more, but just a little bit more. But I'd potentially start to nibble on them even right here. What's your YouTube account? Yeah, hey, Pine Up. My YouTube channel is called Nathan Robert. My YouTube channel is also, you can just go to YouTube and type in Nathan Robert. It's also in the link tree in my bio. It's like the third. You can't miss it. I'm streaming on there as well. So yeah, best way to support me. If you miss anything, guys, go. You can watch the replay on my YouTube channel called Nathan Robert. Yeah, I stream on both platforms. I'm trying to build on my YouTube channel, so the best way to support me is just subscribe over there. I sell nothing. I have no course, book. Watch out for people impersonating me too. I'll never follow you or DM you or anything like that. So yeah, we'll do one more. I guess. APLD. You know what? That's a company owned by Nvidia. If we go back to the Nvidia portfolio right here, they own CoreWeave and they own APLD. And APLD just went into a huge partnership with CoreWeave. So CoreWeave and APLD, huge partnership. That's kind of why the stock jumped up, like gapped up on this day, and they reaffirmed it on their earnings guidance. So yeah. So let's see. Announces 3 billion. Polaris Forge 2. Wait, what? And they're doing some investment here, a $3 billion investment. Anyway, that's really interesting. What happened? Yeah, hey, Jay Jeff. Yeah, hey, thanks. If you want to get this brokerage, this app I'm on, it's actually a brokerage where you buy stocks and stuff. It's in the link tree in my bio. It's the very first link there. It's an affiliate link too. So if you deposit $100, we'll both get 5 free stocks. And this app I'm on, it is free. Yeah, like with Robinhood, you have to pay $5 a month, but not with this app. And this app that I'm on as well, this brokerage I'm on, is also publicly traded. This is this software I'm on right now. Here is their stock publicly traded, and they're printing money right now. Check this out. I mean, look at this. They made 275 million of net income this quarter. I mean, even if this company went bankrupt, you're still FDIC insured for 250K. But yeah, brokerage commissions are half their revenue right now. The commissions are crazy. That they're making. The interest income's at a record as well. So anyway, I love this app right here. Yeah, they have how many users? 26.3 million. So hey, thanks so much for signing up with my link. Here, I'll give you a follow. I really appreciate that. Well, hey, if you sign up with my link and deposit $100, we'll both get 5 free stocks. I think you get like a share of Nvidia or something. I don't know. Anyway, something like that. So do you use interactive brokers? I actually do not. So I don't know what that's like. And and I use as well Webull. I have my Webull brokerage and I have Robinhood. But my favorite, most useful, like practical one would be this one right here, Moomoo. And I have tutorials how to use this as well in the link tree or on my YouTube channel also. So anyway, I hope you guys have a great rest of your day. I'm going to end the stream here. By the way, I will be live. I try to stream every single day. So if y'all want the follow button, sometimes twice a day, like on Sundays, I'll stream twice a day. But yeah, see you guys very soon. Again, make sure the best way to support me is subscribe to my YouTube channel, trying to build it up there. And if you miss anything, you can replay the stream on YouTube. Again, have a great rest of your day. See you later. Happy Tuesday. Boom. Oh wait, yeah, we're streaming on YouTube as well. Yo, for y'all on the YouTube stream, y'all are the best. I really appreciate y'all. Uh, have a great day.